We are live now.
Okay. Okay, so good afternoon, everyone. For day three of this revision, and day three, and probably the final revision of today's final revision for financial management. And as we have discussed in the past 2 days, total we have 9 chapters. Out of these 9 chapters, two are theory chapters. I mean, completely theory chapters. It's not that from other chapters theory may not be asked. From other chapters also theory may be asked. But two chapters are earmarked for theories. So 7 chapters we are having to discuss, and from those 7 chapters, we have already discussed 5 chapters. 2 chapters are remaining, that are dividend decisions and management of working capital. So dividend decision is a very small chapter, first very important for exam perspective, because definitely 1 or 2 questions are asked from dividend decision chapters. And regarding management of working capital, it's a lengthy chapter, and definitely one more question. I mean, one question is definitely asked from management of working capital also. So dividend decisions, what I feel is that many students leave this chapter, dividend decisions. I don't know why, but it is one of the easiest chapter in financial management is what I feel. Because it is a completely computational chapter where we just have to know some 2 or 3 formulas, and if you know those formulas and if you know how to approach a problem, you'll be easily able to handle any problem which is there in dividend decisions. Management of working capital, yes, because it is lengthy, I feel that many students leave it. But management of working capital, again, we have a certain standard set of questions that are repeatedly asked in the examinations. So we will try to focus more on those standard questions. Okay, so let me share my screen. And also, if you are in YouTube live, I want you to just say a hi or just respond so that I get to know that yes, we are good to go. Also, if you are in YouTube live, I want you to say a hi or just a response that I get to know that yes. Okay, fine. So I got a response, and okay. So let us start. Okay, let us start. So I hope you guys are doing problems also that I'm giving you in the classes just for you to practice, because investment decisions really lot of problems you have to solve just to get hold of how many different types of problems are there. I've made a compiler for that. So this is having from May 2018 till the recent RTPs, like past 10 attempts, all the RTPs, and past 10 attempts, all the previous year question papers I've compiled at one place for financial management. That is around 386 pages it is. So it is nothing. Okay, this is not a material that is that is made by me. This is just I have compiled it. What I did, I just downloaded all the past 10 attempts RTPs, downloaded all the past 10 attempts previous year papers, and FM and economics was together. So I removed economics and then I merged it all together and just kept a name. For example, this is previous year question November 22. So like this, I've just kept it. So this will be like a source book for you for practice problems. So that is what I was trying to like. From here only, I refer all the problems. No problems, I'm making it on my own. So I'm using only ICI problems. So because what I see is that usually 80%, 70 to 80% of the problem are either ditto from ICI material or ICI sources, or numbers are changing here and there, some one or two changes are there. For 20-30%, the chances are there to come a new question, but that is also not a new question. Some new points are there in an additional questions. So, and it is very easy once you have a different model of questions in front of you. It is very easy for you to handle any type of problem which will come to you in the examination. Okay. So now let us start. Okay, so just to give you a quick overview, these are all the chapters, and we are yet to complete dividend decisions and working capital management. So we started with financial management, then we started with leverages. So leverages, we have 7 formulas. And if preference dividend will come, what is the adjustment that you have to make? And margin of safety, what is the thing? So margin of safety is nothing but 1 by operating leverage, or operating leverage is nothing but 1 by margin of safety. Then we went into investment decisions. For investment decisions, beforehand, I wanted to teach you time value of money. Then we discussed time value of money, where I just taught you how to discount different types of cash flows. Then we went into different techniques, like payback period, discounted payback period, NPV, profitability index, and internal rate of return. All these things we have discussed. So one by one, left, right, center, we have discussed. So to the extent possible in the revision class, I have given my best, the best explanation which is possible for all these things in the least minimum time. Then we went into a cost of capital. In cost of capital, we studied about cost of debentures, cost of preference shares. Then we went into cost of equity. And the cost of equity, I said that we are having different assumptions. Basis different assumptions, we are having different formulas. Then we saw that after finding specific cost of capital, we have to find something called as weighted average cost of capital, that can be found using two weights: market value weights and book value weights. Book value weights, now the value which is given in the balance sheet. Market value which is the value which is trading, okay, with the value which is trading. For example, the market price of the debentures, the market price of the share will become the equity, and the market price of preference share. Then we went into capital structure decisions. We started with EBIT, EPS, and NPS analysis, where we saw that we'll start with EBIT, we'll end with EPS or NPS, and wherever it is higher, that is what is the ideal capital structure. Then we went to find out indifference point, which is nothing but the EBIT level where the EPS is same. So EBIT level where the EPS is same. Then we went for financial break-even point, that is the EBIT level where the EPS is zero. Then we went into capital structure theories. We saw net income approach, net operating income approach, and traditional approach we saw. We saw how to calculate all these things. Then I also taught you, when tax impact is there, then how to handle problems. So value of levered firm is equal to value of unlevered firm plus the value of debt into taxes. That is what we discussed. Then we went into the second part of investment decisions, where I taught you how to estimate the cash flows. So cash flows, you bifurcate into three: initial cash flows, annual cash flows, and terminal cash flows. Then we discuss what are the different adjustments which are possible. So one of such adjustments will be under replacement decision. Purchase now, it will be an outflow. Sales now, it will be an inflow. Scrap value now, on the terminal, it will be an inflow. Working capital investment now, zero there, it will be an outflow. Terminal year, it will be an inflow. And then we also saw opportunity benefit, opportunity cost. What is the cost saved? What is the benefit foregone? So all these things we discussed, because these are only things which are possible in a word problem. And word problem, the number of problems you solve, you will get some clarity. Okay. Then we saw how to calculate annualized NPV, which is nothing but the NPV for different years divided by present value annuity factor for that respective years, which will give you annualized NPV, and that should be comparable. Then we went into ratio analysis. I saw that ratio analysis, only two types of problems are possible. One type of problem, income statement and balance sheet will be given, and from there you have to find out the ratios. Second will be ratios and other informations will be given, and you have to find out the relevant data, or you have to frame a balance sheet or P&L. So there we saw different types of ratios. We saw profitability ratios. We saw liquidity ratios, short-term liquidity, long-term liquidity ratios, and then we saw coverage ratios, then turnover ratios we saw. And from there we also did a problem. From there we also did a problem for ratio analysis. Then after doing a problem in ratio analysis, now we are starting off with dividend decisions. Okay, fine. So dividend decisions, when talking about dividend decisions, one of the easiest chapter, I would say, one of the very easiest chapter, dividend decisions, because here, like, there is not a lot of things to discuss. All things are pretty simple and, it can be easily explained. Like, to understand that will take a lot of time, but for exam relevant things, it are very less things to discuss in dividend decisions. Okay. So now we're talking about dividend decisions. Actually, what is dividend decisions? Like suppose if you're having a balance sheet, this is liability and this is asset side. Okay, suppose you're having equity, you're having debt. So you will finance money. Okay, you will finance money. How much to finance? At what cost to finance? All these are financing decisions. Once you get that money, you will invest that money. Okay, wow. So how to invest that money? That is what is called as investing decisions. This will be the cost. From here, you will arrive something called as IRR. That is what is the return from the project. From here, you will generate something called as profits. Okay. So after taking all these decisions, you will generally take up profits. Now that profits, what you have to do, whether you have to retain that profits or you want to distribute that profits. Okay, this is the decision that you want to take. If you're retaining the profit, that means you're again reinvesting into the business. If you're distributing it, it is going out of the business. Another, whenever we are taking distribution, when we are distributing dividend, it is always reduced from the equity because it is going out of the balance sheet. Cash will be reduced here and equity will be reduced here. So it is going out of the balance sheet. Okay. Now when you are retaining the amount, what will happen? It will again come under the investment side. So this decision is what is called as dividend decision. This decisions regarding what should I do with the profit. Should I retain my profit or should I distribute my profit? This decision is what we call it as dividend decisions. So dividend decisions, a lot of different people have given different models. So we'll be discussing the three major models, which is Walter's model, Gordon's model, and MM approach. Okay, MM is here also. Okay, Walter's model, Gordon's model, and MM approach. So we are going to discuss basically these three models. So these three persons are talking about dividend decisions. Now in this, Walter and Gordon says that dividend decisions are relevant decisions. Relevant na what? If you're changing the dividend payout ratio, if you're changing the dividend payout ratio, your value of the firm will change. Okay. And what MM approach is telling, dividend decisions are irrelevant. Irrelevant of what he's trying to tell. He's trying to tell is that whatever be your dividend, okay, whether you pay dividend or you do not pay dividend, it does not have any impact on the share price. And what Walter and Gordon are telling, sir, you have to pay some optimum dividend. On that optimum dividend, your share price will be highest. If you're not paying proper dividend, your share price will be lowest, which means dividend decisions affects the share price. That is what is called as relevant decisions. Dividend decisions does not affect the share price. It what is called as irrelevant decisions. Okay, irrelevant decisions. Okay, now, so till here you got the clarity. This is the introduction to dividend decisions. Now let us jump into Walter's model. Okay, now what is Walter's model is trying to tell? One minute. Just let me check. I'm looking for something. Mhm. So we have a question for Walter's. and optimum dividend payout ratio according to Waters model and market value. That way. Okay, fine. Now, when we are discussing about what is Walters model, see these people give you a share price formula. Okay, Walters and Gordon are giving you share price formula. That is the formula for PO. Sir, share price formula we already know, sir. Somewhere we studied share price formula also. Okay, see, let me just give you a revision here. K, I said you four different types. So there are three different types I'm discussing. Constant dividend approach, constant earnings approach, dividend growth model. You know, correct? K is equal to, if it is constant dividend approach, it is nothing but D divided by 0. If it is constant earnings approach, it is nothing but E divided by P0. Correct? EPS divided by NPS. NPS is nothing but P0. If it is dividend growth model, you know that K is equal to D1 divided by P0 plus G. Then you all know this formula. So from here also you can find out the price, correct? So these three different assumptions, three different prices can be calculated. Like one type of price, what I can calculate is D divided by K. Correct. From one type of price, how I can calculate E divided by K. From here also I can find out price. How will I find out? So I will just do K minus G here and then P0 here. So D1 divided by K minus 0. So here is equal to D1 divided by K minus growth rate. Like this is how I can calculate D0, sir. Now, sir, upload different types of prices you are able to, Walter is again giving you one more price formula. What Walter is telling is that price is equal to D plus R by K into E minus D divided by K. So this is what is Walter is giving. There's a different types of price formula we are understanding, which is the correct formula. See, there is no correct or wrong formula. It is all about different assumptions. Like here, the price is having an assumption that it is a constant dividend. Here, the price is having an assumption that it is a constant earnings. Here, the price is having an assumption that it is a dividend growth model. Correct. Now, here what assumption Walter is making, basis that he is giving this formula is what we are discussing. See, whenever you are studying something, you should not get confused. You should never get confused. Okay. Now, just see what Walter is thinking. Okay, see, I'm not making a mug up the formula. I will make some efforts to, explain the formula as well. Because once the formula you're understanding, even if you're forgetting the formula, you would be able to arrive at the formula. That is what is my thinking. Let me see in YouTube if it is. Once you respond, if you're understanding what I'm trying to tell. The formula you're understanding, even if you're forgetting the formula, be able to arrive at the formula. What is it? Once you respond, if you're understanding the formula, once you respond, say okay, fine. So I'm getting responses. Fine. Now, Walter's model. Okay, now see what Walter is thinking. Now see this price formula. In the price formula, you have to break panna. Okay, one is D divided by KE, another one is R by K into E minus D divided by KE. Correct. ஏன்னா இது ரெண்டு add பண்ணிட்டு this formula is made. If the denominator is same, you can just add D plus R by K. So that means he is accepting one, which is constant dividend, which means this is nothing but present value of constant dividend. This is nothing but present value of constant dividend. Okay, this is nothing but present value of constant dividend. So what he is telling, he is accepting this present value of constant dividend. Okay. Next, what he's trying to do, okay, sir, this is one thing that he's accepting, but he's saying the value is more than that, because the dividend that you're getting, the present value of dividend is your value. But after paying dividend, you also have something called as retained earnings, correct? This E minus D is what? Retained earnings. Okay, retained earnings. Now, this retained earnings you will not get. This retained earnings is reinvested into the business. Okay, if there is this retained earnings is reinvested into the business, and what you will get is something called as a return on retained earnings. Correct. So R is nothing but the IRR. Okay, IRR on the projects. So what you're going to get, R into E minus T. Okay. So now this is what, this is a return on retained earnings. This is a return on retained earnings. Okay. Okay, till here the story is clear, sir. Okay. So R into E minus T is nothing but the return on retained earnings. Now, this year I got 100 rupees EPS. Okay, 80 rupees are distributed as dividend, 20 rupees I'm retaining. Now, on the 20 rupees, I am earning 10 percentage. Okay, which is because this 20 rupees is reinvested into the business. Now, once this 20 rupees is reinvested into the business, I am getting 10 percentage return, which is 2 rupees return. But this 2 rupee return I will be getting every year. Because I've reinvested into the business, now this return I'm going to get every year. So that is the reason what I'm doing. R divided by K. Because divided by K, what I'm doing, the present value. The present value. So what I'm doing, R divided by K. What I'm doing, this return I'm getting every year, correct? So now what I'm doing, this is nothing but the present value of return on retained earnings, because this I'm going to get every year. So constantly I'm going to get the return on retained earnings. That is the reason I'm putting R into E minus T divided by K. Okay, sir, till now it is okay, sir. But next year again you will have, because I said that every year the earnings are same. So next year again I will be having 100 rupees. On that 100 rupees, next year again I will pay dividend of 80 rupees. Okay, so this will come here. But again I will be retaining 20 rupees, correct? So which means this is the present value of return on retained earnings of this year. Okay, this is nothing but the present value of the return on retained earnings of this year that I'm going to get every year. So this return is on retained earnings of this year. Okay. And this year's retained earnings, I'm going to get the return on this year's retained earnings, I'm going to get every year. But every year I'm retaining. So every year I'm retaining, every year I will be earning. So this I am going to get every year. Are you with me? So what I'm doing, present value of return on retained earnings. Because this is a present value of return on retained earnings of perpetual years. Okay, of perpetual years. So this is what is this. So what the Walter is trying to tell is that first you are going to get dividend. Second, you are going to get retained earnings. But that retained earnings you are not going to get directly. This retained earnings, then you will be earning something called as a return. This return you are going to earn every year, and every year you are retaining. So that is the reason R into E minus D divided by K. The whole divided by K. Okay, so K divided by K. So that is the reason. The logic பார்த்தீங்கன்னா, so now we understood the logic. Okay, sir. So which means d by k plus r by k into e minus d divided by k. Then k constant, you are going to get the formula. Then you will put a k as constant. So dividend plus r by k into e minus d. This is what is the price formula for Walter. I hope you guys are understanding this. Okay, clearer, you guys are understanding. Okay, well, if you are understanding, type that yes, okay, I understood this thing. Okay, whenever we are discussing something, you have to enjoy the discussion. Only then you'll be able to appreciate the subject. Exam preparation is one part, but we are studying for exams. But the point is that if you're learning something new, you have to appreciate it. Okay, you have to appreciate, and also you have to show that appreciation. Okay, so now the price formula is d plus r by k into e minus d, the whole divided by k. This is the formula for Walter. Okay, this is the formula for Walter. Now, if you understand this formula properly, you can directly put E minus D, okay, E minus D divided by K. Directly you can put this. Correct? If you're thinking dividend I'm getting every year, retail earnings I'm getting every year, directly you can put. Then why R is given? Because sometimes what will happen is that your IRR will be more. Right? You will be earning more, but your cost is less. So that is the reason your retail is growing at a grower rate. I mean, it is growing at an increasing rate. See, because your IRR is 15%, but your cost is 10%. So what is happening here is that your retained earnings ka cost is 10%, but your earnings is 15%. So your retained earnings is growing by 5% every year. And the it is not exactly 5%, but you have to understand that cost is 10%, but you're earning 15%. Okay, you're earning 15% on that amount where the cost is 10%. So that is the reason it's compounded by 5% every year. This point I understand. So what they are trying to tell, okay, so which means the optimum dividend payout ratio. So according to Walter, what is the optimum dividend payout ratio? This is going to be most important. So what he is telling is that if your R is more than K, which means shareholders are expecting 10%, but you are earning 15%, then definitely you have to retain. Correct? Because he is expecting 10%, but you are growing that amount in 15%, the shareholder will be happy. Then the optimum dividend payout ratio is 100%. I mean 0%. Okay, because you have to retain 100%. So optimum dividend payout ratio is 0%. So 0% dividend and 100% you have to retain. Okay, that is what I'm trying to tell. But now your R is less than K. Here you K, the shareholders are expecting 10%. Okay, shareholders are expecting 10%, but you are able to earn only 8%. Appadina, if you are investing and growing their amount in 8%, shareholder will be unhappy. So it is better you give them dividend and they let them earn 10% because you have only projects worth of 8%. So then you have to pay 100% dividend. Okay, and you have to retain 0%. That is what is the optimum dividend payout ratio. Sir, what if my R is equal to K? Shareholders are also expecting 10%. My return is also 10%, sir. Then what is certain? Then it is indifferent. Okay, then it is indifferent. Indifferent another sir. Any dividend payout ratio is optimal. Okay, any dividend payout ratio is optimal. So now, basis that price formula, you found out the optimum dividend payout ratio. So the first is if your return is more than cost of equity, 0% dividend. If your return is less than cost of equity, 100% dividend. If your return is equal to cost of equity, which means any dividend payout ratio is optimal. This is what is the next discussion. Okay, I hope you guys are understanding this point. Okay, Walter's model, the price formula is T plus R by K into E minus D, the whole divided by K. So, and then comes the optimum dividend payout ratio. Okay, sir. Appadina, if your dividend is not optimum, your price will change. That is what they are trying to do. Which means your R is 15%, your K is 10%. Okay, if your R is 15%, your K is 10%, what is your optimum dividend payout ratio? Your optimum dividend payout ratio should be 0. Correct? Because you should not pay any dividend because your R is 15%. Because here the R is more than K. So dividend payout ratio should be 0. Okay. Sir, my ideal dividend payout ratio, this is what is my optimum dividend payout ratio will be 0. But still we pay dividends, sir. Actually, this should be 0, okay, but still we pay dividends, sir. If you're paying dividend, what will happen? If you're paying dividend, what will happen? Your price will fall. Okay, your price will fall. Just imagine, Panipa. This should be 0, okay, which means if this is 100, okay, this is 100, and your your earnings is 100 okay, your earnings is 100 then your dividend payout ratio should be 0. Okay, your dividend payout ratio should be 0, but you are paying 10 rupees dividend, sir. So if this becomes 10 now, this will also become 10 and this will become 90. So 90 will be growing at 15% and 10% rate, and 10 will be growing at a 10% rate. So your price will be a little bit lesser as comparison to 100 is growing at that 15% rate. Are you all with me? Okay, so this is what they're trying to do. Now, if you do a problem, you'll be able to understand what you're trying to do. Okay, what you're trying to do. I will do one problem and then I will give you one problem to solve. Okay, only that you'll be able to have that clarity. Okay, so let me directly do a big let me directly do this problem. Okay, directly do this exam specific problem. Direct exam in very question. Direct okay. So May 2018 question number 4. May 18 RTP question number 4. Question number 9. Okay, question number 9. A question on dividend. Now, whenever we're asking Walter's model, okay, I'm just giving an approach. Walter's model, I'll first write out the formula. Okay, first write out the formula. Walter's model. Otherwise, you will forget it. Okay, while reading the question, some irrelevant information will be given, but you should be very strict to the formula because there is no other formula for Walter's model. So D plus E minus D into R by K, the whole divided by K. This is what is the Walter's formula. Okay, now here D is equal to dividend per share. This is how you have to present the answer. Okay, dividend per share. E is equal to earnings per share. Okay. R is equal to rate of return on investment. Okay. Rate of return on investment. K is equal to cost of equity, or it is also called as equity capitalization rate. Okay, sir. What is my dividend, sir? Okay, so first thing is that my earnings of the company, it is not dividend per share, it is also dividend. Total dividend also you can write. But per share, so number of shares outstanding is 4 lakh, okay, and earnings is 20 lakh rupees. 20 lakh rupees is your earnings. So what is your earnings per share? Okay, which is earnings available to equity shareholders. So earnings available to equity shareholders, it is this, direct are given. Direct are given, correct? Earnings are the preference dividend, correct? Interest only. Okay, so this is 20 lakh rupees. So 20 lakh rupees divided by 4 lakh rupees number of shares. So 20 lakh divided by 4 panna, you will get 5 rupees as your earnings per share. Okay, 5 rupees as your earnings per share. What is the dividend payout ratio? 60%. So out of those 5 rupees, 60% is paid as dividend. Okay, 60% is paid as dividend. Up in 3 rupees is dividend per share. Are you all with me? Okay, 3 rupees is dividend per share. And rate of return on investment is 16%. And cost of equity is 12%. First, what they're asking, based on this information, find out the market value per share. Based on this information, not optimum, based on this information. Actually, the optimum should be you should not pay any dividend because R is more than K. First you calculate the price. Okay, now 3 plus, okay, 3 plus 5 minus 3, which is retained earnings, into 15% divided by 12%, the whole divided by 12. Now, what is the price for me? Okay, which is nothing but, madam, calculator. Papa, calculator. Okay. So now 2 into 15% divided by 12%, you are going to get 2.5. So 3 plus 2.5 is 5.5 rupees, and 5.5 rupees divided by 12% is 45.83. Okay, 45.83 rupees is the market value per share. Let me just double check. 2 into 15% divided by 12% is 2.5. Plus 3, it is 5.5 divided by 12%. I have to do. Okay, so 45.83 is the price. Now the second question what they're asking, is the compute what is the optimum dividend payout. Okay, now optimum dividend payout ratio. Optimum dividend payout ratio is equal to 0. Why? Why? Because R is more than K. That is the reason optimum dividend payout ratio is 0. Now, in optimum dividend payout ratio, what is the price of the formula? So, price of the formula is D plus E minus D into R by K. So, this should be 0. Okay, but this should be 0. If this is 0, now what will happen? 0 plus earnings is 5 minus 0 into 15% divided by 12%. Okay, into 15% divided by 12%, the whole divided by 12%. Now see entire 5 rupees. Okay, well, previously it was 2.5 rupees, right? 2.5 rupees was the retained earnings, and then 3 rupees, so 5.5 rupees. Now see 5 into 15% divided by 12%. Now 6.25. 5 is becoming 6.25. This 6.25 is growing divided by 12%. You are going to get 52.08 rupees. Now this is the maximum. Okay, this is the maximum share. So because you are not optimum, that is the reason your share price was lower, which is 45.83. So this is what is the question. Okay, this is what is the question. Very easily, the 5 to 6 problem, 5 to 6 marks question, you should be very, very happy. Okay, so let us check the answer. 45.83, 52.08. 45.83 and 52.0. It's a very easy answer. Very easily we have solved it. Okay, so Walter's model. What I'm going to do, I'm going to give you also one problem because some practice you should be having. Just let me give you one problem. This is Gordon's model. This is like the same problem that we solved. Okay, this is like the same problem that we solved. No changes. Actually, கொஸ்டினே கேட்க முடியாது கரெக்டா. வால்டர்ஸ் மாடல்ல இதுக்கு மேல ஒரு டஃப்னஸே இருக்காது. Still, let me check one problem. Again, this is like the same problem that we solved. Okay, nothing is. Anyways, you calculate this. Okay, you calculate this for 8-1. Calculate what is the price as per Walter's formula. Okay, calculate what is the price as per Walter's formula. And I also want you to calculate the optimum dividend payout ratio. Okay, 3 requirements. First, find out the price. Second, find out the optimum dividend payout ratio. Third, find out what will be the price at optimum dividend payout ratio. Okay, in the mood, you have to calculate and tell me. Okay, this is the question 8, and this is the question. Walter's model. First, find the price. Second, find out the optimum dividend payout ratio. Third, find out the price at optimum dividend payout ratio. Okay, I'm giving you for the actually it is a 2-minute Maggie problem. Okay, but actually I'm giving you some 3 to 4 minutes for you to solve this problem. Then we will jump into Gordon's formula and then easy and okay. Okay, so I got some answers. One answer what I'm getting is P0 is equal to 986.67. 96.67. Okay, let me check. Earnings per share. So dividend per share is 36 plus 120 minus 36 into 20 percentage divided by 15 percentage, the whole divided by 15 percentage. See, very simple. 1 minute you can solve it. So 120 minus 36 is equal to 84 into 20 percentage divided by 15 percentage 112 plus 36 divided by 15 percentage. Very good. You're getting 986.67. Very good. Okay. So this is the correct answer. 986. Very good. Appreciate a lot. So this is the correct answer. 986.67. Dividend payout ratio is nothing. Dividend payout ratio is 0. If your dividend payout ratio is 0, then it should be 120 into 20 percentage divided by 15 percentage, the whole divided by 15 percentage, you're going to get 1067, I believe. Very good, very good. So 1067 is the answer. If any problem for Walter's model comes, it is always, in this same pattern only. So you're comfortably solving all the problems. Okay. Now, let me go into the second model, which is what is called as Gordon's model. Okay. Gordon's. Now, Gordon's model is again giving you a price. Sir, Gordon's model, what he's giving? What he is telling is that, okay, E1 into 1 minus B divided by K minus B into R. This is his formula. Now, sir, this formula, again, sir, thinking, see, if I tell you, this formula is nothing but dividend growth model. Okay, நம்ம dividend growth model என்ன பார்த்தோம்? B0 is equal to B1 is equal to K minus G, correct? B is nothing but 1 minus B. B is nothing but retention ratio. 1 minus B is what is called as the dividend payout ratio. So earnings into dividend payout ratio is equal to D1. Correct? So in the D1, you can write it as E1 into 1 minus B. B is retention ratio. Okay, B is equal to retention ratio. So retention ratio 1 minus B is equal to nothing but dividend payout ratio. So if 90% is dividend retention ratio, 10% is dividend payout ratio. So 1 minus B, 10% is dividend payout ratio. So earnings into dividend payout ratio is equal to D1. So that is what they're trying to do. E1 into 1 minus B. So divided by K minus G. G ke badala they are writing B into R. I already said you growth is nothing but retention ratio into return on equity. Correct? So R is nothing but the return on equity. The return on equity or return on investment, whatever be the case. Return on investment, whatever be the case. This is nothing but so this formula, okay, this formula P0 is equal to E1 into 1 minus B divided by K minus B into R. Nothing but the dividend growth model formula, but in a different way. So, sir, copy பண்ணிருக்காங்களா? It is not copy. It is just that he has given a meaning to this formula. The meaning he is giving is that growth is having an advantage and growth is having a disadvantage also. Because of growth, your dividend is also reduced. Somebody has given a meaning. Now, I'm not going much into the meaning of the formula, but you very well know the derivation of the formula and you very well know how this formula is arrived. So now it is very easy for you to remember. Okay, sir. So Aprina, you know that. Okay, well, you know that you have to write E. Okay, earnings per share. So this Gordon's you have to do one Gordon for a big every water garden or dinner, 2 minutes Maggie form. This is again Walter same. Garden. Now, this is the question. Okay, this is the question. Find out the price per share using Gordon's model and the dividend payout ratio. And one more thing, for Gordon also, the optimum dividend payout ratio is same. Okay, well, optimum dividend payout ratio is same. If R is more than K, the dividend payout ratio should be 0. If R is less than K, the dividend payout ratio should be 100. If R is equal to K, then any dividend payout ratio. Okay, any dividend payout ratio. This is what is the the same optimum dividend payout ratio Gordon is also using. Now I'm solving this problem. Okay, I'm solving this problem. Net profit 30 lakh rupees. Yeah, see here outstanding 12% preference shares are there. So அப்படின்னா இந்த net profit நான் preference share remove பண்ணா மட்டும்தான் I'm going to get earnings available to equity shareholders, correct? So net profit is equal to 30 lakh rupees. Okay, 30 lakh rupees. Here I will reduce preference dividend. What is preference dividend? 100 lakh into 12%, it is 12 lakh rupees. So the 12% preference dividend remove பண்ணா எனக்கு 18 lakh rupees வரும். This 18 lakh rupees is nothing but the earnings available to equity shareholders. In get divided by number of equity shares, which is 3 lakh rupees. So 18 lakh divided by 3 lakh, I'm going to get something called as 6 rupees. This is what is the EPS. So now I got my EPS also. Okay, now I got my EPS. இப்போ நான் ஈஸியா எல்லாமே ஃபைண்ட் அவுட். ஓகேவா, now I want to find out three Gordon's formula. Okay, three. I want to find out three share price formula where the dividend payout ratio is how much? 25, 50, 100. 25, 50, 100. What are the other information given? R and K. Okay, R and K. R is 20, K is 16. Okay, so R is 20, K is 16. So first of all, the optimum dividend payout ratio should be 0. Okay, the optimum dividend payout ratio should be 0. But our 25, 50, 100 get. So 20 na 6 into 25%. 6 into 25%, 1.5 rupees. 6 into 50%, 3 rupees. 6 into 100%, 6 rupees. Okay, so now I want to find out the formula. So E into 1 minus B. Okay, so E into 1 minus B. If this is the dividend payout ratio, what is the retention ratio? Retention ratio is equal to 75%. Correct? B is equal to 75%. Here B is equal to 50%. B is equal to 0%. Don't directly write 6 into 25%. Okay, formula mari heldu. Okay, so 1 minus 75%. You all know it is 25%, but still you have to write it in the formula way. So E into 1 minus B divided by K minus R, which is nothing but K minus B into R. Okay, so what is K? K is equal to 16% minus B into R, which is nothing but 20% into 75%. Okay, same thing you have to write here. E1 is equal to 6 into 1 minus what is the B? B is equal to 50% divided by K minus B into R. So K minus what is B here? B is here is equal to, like, R is equal to 20% and B is equal to 50% here. Same way, earnings into 1 minus what is B? B is equal to 0 here. Okay, B is equal to 0 here, divided by K is equal to 16%. 16% minus 100% dividend growth irukadu, correct? Growth illana R into B is equal to 0%. Okay, so growth illa. So direct 16%. No, just find out. Okay, just find out. 6 minus 75%. We're going to get 1.5 rupees. Okay, 1.5. So this is nothing but 1.5. Okay, this is nothing but 3, this is nothing but 6. Okay, now divided by 20 into 75% is 15%. Okay, so 15 minus 16 you will get 1%. Okay, 20 into 50% is 10%, minus 16 panna I'm going to get 6% here. Okay, அதே மாதிரி இங்க என்ன வரும்? இங்க எனக்கு 16%, கரெக்ட்டா? So now 1.5 divided by 1% is 150 rupees. 3 divided by 6% is 50 rupees. 6 divided by 16% is 37.5 rupees. Now see, your share price is reducing. You're going against your optimum dividend. Your optimum dividend payout ratio should be 100%. Okay, should be 100%. I mean, should be 0%. Sorry. Ana only 25. Adnala price is 150. Inno adhigama dividend pay panna price is coming down to 50. Inno adhigama dividend pay panna price is coming back to 37.5. So this is the answer: 150, 50, and 37.5. Okay. See the answer: 150, 50, and 37.5. Now you have to solve the problem. Okay. So now we got it. இப்போ நீ என்ன பண்ண தெரியுமா? இது நீ கால்குலேட் பண்ணு. ஓகே, அகைன் பா நீயே கால்குலேட் பண்ண திஸ் ஆன்சர் ஃபார் கார்டன்ஸ். ஸோ கார்டன்ஸ் ஃபார்முலா அகைன் நீ என்ன பண்ண தெரியுமா? Gordon's formula to find out what is the price. Okay, well, give me the formula for price for Gordon's. Okay, give me the value. What is the price for Gordon's formula? 2 minutes. Okay, well, 2 minutes. I'm giving you time. Secret 2 minutes. Gordon's formula. Secret Gordon's. So, so I hope you would have calculated this. So see, this is very easy. First, you have to find out B. Okay, you have to find out B. So B is nothing but 1 minus dividend payout ratio. So here, what is the dividend payout ratio? 36 divided by 125. Now, 30 percentage is the dividend payout ratio, correct? So dividend payout ratio is equal to 30 percentage. If 30 percentage is the dividend payout ratio, then the retention ratio is equal to 70 percentage. Okay, the retention ratio is equal to 70 percentage. So this becomes very easy, which is nothing but 36 divided by K. K is equal to how much is the K? K is 15 percentage minus B into R. So which is nothing but 20 into 70 percentage. Okay, so 20 into 70 percentage is equal to 14. 15 is equal to 1 percentage. So 36 divided by 1 percentage. You're going to get 3,600 rupees. Okay, so now you check the eighth one answer. You're going to get 3,600 rupees. 3,600 rupees. Okay, this is nothing but 9.6. And yeah, this is how we have to. Whenever any question is given, first, as per Gordon's model, this is the formula. Then explain that formula. Okay, and then apply the formula. As per Walter's model, this is the formula. Then explain the formula and then apply the formula. Okay, after the marks, okay, after you will get all the marks. Otherwise, you just put the formula, you will only get 2 marks. For 6 mark problem, getting 2 or 3 marks is a very waste thing. That too, knowing everything. So always try to score more marks. Many people are, because of these small things, they're losing 1 or 2 marks, and that 1 or 2 marks is making a difference in the overall total, which is your 39 can become 40, or 59 can become 60. So don't, because of these small, lazy things, never miss out on marks like this. Okay. Now, this was all for Gordon's dividend decision. Maybe na konja depth together. Maybe na because I feel that questions can be very repeatedly asked here. Okay, next one is approach. Okay, next one is approach. So the approach they're giving you a formula. Okay, they're giving you a formula. First of all, they're using single formula. What they're telling is that current price. The price is nothing but the present value of whatever is the future. Okay, so if you're holding a share for 1 year, first you're going to get a dividend. Then at the end of 1 year, you're going to sell the price as P1. P1 is nothing but price at the end of 1 year. D1 is nothing but dividend that you got for the first year. Okay, so D1 plus P1 is nothing but the value that you're going to receive after 1 year. Either 1 year present value. So 1 by K. So the 1 by I to the power n. So this year present value for 1 year, you're going to get the price for this year. You're going to get the price for this year. This is what is the formula that approach is using. So approach is this formula. Sir, approach, what he is telling now, your price will remain constant, whatever is the dividend payout ratio. Okay. So any dividend payout ratio, your price will be constant. Okay, your price will be constant. What is that? அப்போ எப்படி சார் price change ஆகல சார் price change ஆகும், but what he's telling is that your value of the firm will remain constant. Value of the firm is nothing but number of shares outstanding into P0. Correct? This will not change whatever be the whatever be the dividend payout ratio. Which means what he is going to tell is that if you multiply n by both sides, so n into P0 is equal to n d1 plus n p1 divided by 1 plus K. Okay, just remember this. So NP0 is equal to NP1 plus NP1 divided by 1 plus K. Okay, this is the beginning of the year. Okay, this is the beginning of the year. Now, as per approach, okay, as per approach, what is telling, what is telling is that you have to invest. Okay, well, what is telling is that you have to invest. Okay, now for example, you're having retained cash of 1,000 rupees. Okay, you're having retained cash of 1,000 rupees. What he's telling is that now you have two options, correct? Two options. One is to distribute as dividend. Second one is retain that amount. Correct. Discuss பண்ணோம். But what is telling is that if you are having some investment, okay, if you're having some investment opportunity of 1,000 rupees and you're having cash of 1,000 rupees, if you distribute as dividend, you distribute it as dividend, no problem. You distribute 1,000 rupees as dividend, but you again issue shares worth of 1,000 rupees. What is telling you? You issue shares worth of 1,000 rupees. Okay, issue shares worth of 1,000 rupees, and then you invest, or you directly retain 1,000 rupees and then you invest. Whatever be the case, your value will be safe. That is what is trying to do. என்ன சொல்றேன்னா, whether you distribute the dividend or you retain the 1,000 rupees, your value remains unchanged. That is why here dividend decisions are irrelevant. But when you're distributing it as dividend, you have to issue shares worth of 1,000 rupees. So again, sir, when I'm distributing it as dividend, my value, okay, my price will reduce. Correct? Whenever you're distributing, your price will reduce. So on that reduced price, you again have to issue shares. So on that reduced price, you issue shares worth of 1,000 rupees. And now you want to issue more shares. Correct? Your price is reduced. Then you invest. So that is what he is trying to tell. Okay, that is what he's trying to tell. அப்படின்னா அவன் என்ன சொல்றான்னா, you have to issue some shares, correct? You have to issue some shares. This new issue, see, existingly you're having some shares. So N is nothing but the existing shares that you're having. Okay, the existing shares you're having. Delta N is nothing but new shares issue. Delta N is nothing but new shares issue. That is what they are trying to tell. Delta N is nothing but new shares issue. So Rabina, you have to issue new share. Yes, you have to issue new shares. How you have to issue new shares? You have to issue new shares at what price? You have to issue new shares at T1 price. Correct? ஏன்னா டிஸ்ட்ரிபியூஷனுக்கு அப்புறமா தான் after you will distribute dividend, your share price will become P1. Correct? It will not be P0. It will become P1. So on this P1, you have to issue new shares. Issue new shares. So அப்படின்னா என்ன அர்த்தம்? End of the year, what it will become? Okay, this is the beginning of the year. So end of the year, what will happen, sir? Sir, end of the year, what will happen now? Your value. What will be your value, first of all? New shares you will issue at P1, correct? P1. How much new shares you want to issue? That is what you're telling. How much amount of new shares? Here, 1,000 rupees, the investment 1,000 rupees was your earnings. Your earnings was also 1,000 rupees. Your investment was also 1,000 rupees. So you will issue for 1,000 rupees. Correct? You will issue for 1,000 rupees. And அவன் என்ன சொல்றானா, what if your earnings is only 100 rupees? Illana, what if your earnings is 2,000 rupees? Your earnings is 2,000 rupees, but what you have to do? You have to distribute dividend also. You're distributing dividend of 1,000 rupees, and that 1,000 rupees you're giving. So what he's trying to tell is that how much new shares I have to issue? Should be the value of new shares that I have to issue? What he is telling is that first you have to earn something, correct? First you have to earn something. So whatever is a total investment, correct? Whatever is a total investment, அவ்வளவுதான் என்ன சொல்றது, அவ்வளவுதான் நீ issue பண்ணும், correct? Which means suppose you want to invest 1,000 rupees, 1,000 rupees தான் நீ issue பண்ணணும். ஆனா you will be having some earnings also, right? You will not issue completely for I. So you will be having some earnings also. Okay, you will be having some earnings also. Okay, so அவன் என்ன சொல்றான்னா, for example, you want an investment for 1,000 rupees. You want an investment for 1,000 rupees also. Okay, well, Anna, you have an earnings of 100 rupees. அவன் என்ன சொல்றான்னா, you have an earnings of 100 rupees. And on the earnings and then dividend were pay pan. Okay, 50 rupees dividend pay pan. So ND1 is what is the dividend? 50 rupees dividend pay pan. So how much you want to, I mean, how much you want to raise money? So which means 100 rupees you have earned. Other 50 rupees you have paid as dividend. So 50 rupees you are having it as cash. 50 rupees you are having it as cash. Now 1000 rupees you want to invest. Up to now 950 rupees the 950 rupees you should have taken, correct? So that is what he's trying to tell. Delta, okay, well, delta n into P1 is equal to I minus E minus dividend. Okay, E minus dividend. Dividend is nothing but dividend for the beginning of the year. Are you all getting this clarity? Okay, I'm just trying to derivate the formula. After derivation of formula, I will tell you steps how to solve the formula. Okay. So now delta n P1 is equal to delta n P1 is equal to I minus E plus n D1. Okay, I minus E plus n D1. Now in the n D1 what apply போட்டுறேன். Okay, so n D1 is equal to, just 1 minute. D1 is equal to delta n P1 minus I plus E. Okay, apply போட்டுறேன். Now you know this formula, correct? NP0 is equal to NP1 plus NP1 divided by 1 plus A. So in the ND1 இங்கே substitute பண்ணுறேன். Okay, what this ND1 is substitute. So NP is equal to delta NP1 minus I plus NP1 divided by 1 plus K. Okay, so NP0 is equal to P1 is constant. Okay, so என்ன பண்றேன்னா P1 constant எடுத்துட்டேன். So N plus delta N. P1 constant எடுத்துட்டேன் N plus delta N. அப்புறமா நான் என்ன பண்றேன் minus I plus C divided by 1 plus K. This NP0 is nothing but the value of the firm formula. So this is what is the formula. Value of the firm is equal to NP0 is equal to N P1 into N plus delta N minus I plus C divided by 1 plus K. This is what is the derivation of the formula. So after that, what you have to remember? You have to remember this formula. NP0 is equal to P1 into N plus delta N minus I plus C divided by 1 plus K. This is what is the formula. Okay, this is what is the formula. Abhinda sir, any approach problem that problem should be solved using 4 steps. Okay, that problem should be solved using 4 steps. Step 1, find P1. Okay, when P0 will be given in the question, find P1. Why? What formula you have to find P1? P0 is equal to D1 plus P1 divided by 1 plus KE. In the formula which you have to find P1 first. Okay, step 2, find delta n. Delta n, the number of shares to be issued. So how will I find out number of shares to be issued? First, okay, first you see what is the earnings that you're having. Okay, first you see what is the earnings that you're having. Say you're having an earnings of 1000 rupees. Adala, how much is the dividend that you're paying? Okay, how much is the dividend that you're paying? Say you're paying a dividend of 200 rupees. So this is the cash available, okay, which is the earnings available with this is nothing but available for investment. Okay, this is nothing but available for investment. Say 800 rupees is the amount which is available for investment. And what is the investment amount? Investment amount. This is E, this is D, okay, this is I. What is the investment amount? Investment amount is you need 2000 rupees as investment amount. So amount required for investment, okay, which means amount required to be raised. Okay, amount required to be raised is how much? அப்படின்னா 1200 rupees நான் raise பண்ணிருக்கேன், கரெக்டா? ஏன்னா அந்த 1200 rupees raise பண்ணாதான் அதுல 200 dividend நான் pay பண்ண முடியும். And then 800 and 1000 rupees is my earnings. So 800 rupees are my retail earnings. So amount to be raised is 1200 rupees. So to amount to be raised 1200 rupees, how much shares I have to issue? So delta n is nothing but amount to be raised divided by P1 is equal to my delta n. Correct? So now you found what is delta n. So first is find P1. Second is find delta n. Okay, step 3, find the value of P1. Okay, step 3, you know all the values are having. Now find value of the firm n plus delta n into P1 minus I plus E divided by 1 plus K, which to find out the value of the firm. find out the value of the firm. Okay, P1 to N minus I plus C divided by 1 plus K is equal to find the value of the firm. Step 4, I will tell you after this. Actually, the problem is over here. Value of the firm find out onto the answer is over. Step 4 is just a check. Okay, it's just a check. இந்த வேல்யூ ஆஃப் தி ஃபார்ம் வந்து அப்படியே n into p0 மேட்ச் ஆயிடும், கண்டிப்பா மேட்ச் ஆயிடும். And np0 is value which is given in the question already. So this is nothing but okay, well, இங்க just see no mm approach just do. See seventh problem. Okay, so here's seventh problem that I'm going to do. So see this problem. Okay, see this problem. And one for each. Akash Limited has 10 lakh equity shares. Okay, Akash Limited has 10 lakh equity shares at the start of the accounting year. Okay, so 10 lakh equity shares na end. Existing market price is 150. So P0 is 150. Expected dividend per share. Okay, expected dividend, it is nothing but D1. Expected dividend, it is D1. The rate of the capitalization appropriate. So this is nothing but K. Okay. So now you have okay P0, you have D1, you have N, you have the value of K, you have other than the what you have to find out. Calculate the market price per share when expected dividend are declared and expected dividend are not declared based on Modigliani Miller approach. So first what they are asking you to find out is the market price per share. Okay, market price per share. Actually market price per share 150, and if dividend is declared, correct, and dividend not declared, what is the price? Calculate the number of shares to be issued by the company at the end of the accounting year on the assumption that the net income, okay, but net income na earnings is equal to 3 crores. Investment budget is 6 crores when dividend are declared and dividend are not declared. Second, prove that the market value of shares at the end of the dividend declared and dividend not declared. So first, let me see if dividend is declared. Then we will solve for dividend not declared. Okay, va? So dividend is declared na pandra, dividend not declared nee pandra. Okay, va? So first, dividend declared. Okay, dividend declared. Step 1. Okay, va? Find P1. So P0 is equal to D1 plus P1 divided by 1 plus K. Okay, va? So now what is P0? P0 is 150 rupees. P0 is 150 rupees. What is P1? P1 is equal to 8 rupees per share. What is P1? P1 then I find out one. Okay, P1 divided by what is 1 plus K? Okay, it is 1.1. 1 plus K is equal to 1 plus 10%. It is nothing but 1.1. So either and what you have to do, you want to find out P1. Okay, so P1 is equal to 150 into 1.1, 150 into 1.1 minus 1, you're going to get P1. Okay, so 150 into 1.1 minus 8, you're going to get 157 rupees. 157 rupees is your P1. Step 2. Okay, but step 2 is you have to find delta N, which is nothing but the number of shares. So the delta N, you are going to find out delta N. Second step. Okay. Okay. So when dividend are declared, the price is 157 rupees. The price is 157 rupees. Okay. Now calculate the number of shares. So now how to find out the number of shares? So first, what is the earnings? I am having an earnings of 3 crore rupees. I am having the earnings of 3 crore rupees. So from that 3 crore rupees, what is the dividend that I paid? So first minus correct earnings and then a dividend minus. How much is the dividend that I'm paying? 8 rupees per share I'm paying. 8 rupees per share I'm paying. I'm having only 10 lakh equity shares. Now 80 lakh rupees I'm paying it as dividend. So on the 3 crore rupees, 80 lakh rupees, so the point 8 is I'm paying it as dividend. So this is the earnings available for investment. Okay, so it is nothing but 2.2 crore rupees. And how much is the investment that I want to make? I want to make an investment of 6 crore rupees. So minus investment I have to make for 6 crore rupees. So அப்படின்னா, this is the amount to be issued. Okay, the amount to be raised. Amount to be raised. So what is the amount I have to raise? 6 minus 2.2. Okay, 6 minus 2.2. Sign ignore pannu. So 6 minus 2.2 is 3.8 crore rupees is the amount that I have to raise. And how many number of shares I have to issue? Number of shares I have to issue. Delta N is equal to 3.8 divided by, I will issue at 157 rupees. I will issue at 157 rupees. So divided by 157 panna, which means 3 crore 80 lakh rupees divided by 157 panna. I'm going to get 24 lakh 20,000. Sorry, 2,42,038 shares I have to issue. Okay, 2,42,038 shares I have to issue. That's 3.8 crore rupees divided by 157 is equal to this much shares I have to issue. Now see, whenever shares are coming in decimal point, actually it is 0.22, but don't try 0.22. Okay, approximately you just put. But when you're solving value of the firm, okay, step 3 is equal to value of the firm. It is nothing but n plus delta n into P1, okay, minus I plus C divided by 1 plus K. இது find out பண்ணும்போது n வந்து எவ்வளோப்பா? n is 10 lakh rupees, கரெக்டா? So n is 10 lakh rupees. Plus நீ என்ன போடு தெரியுமா? 2 lakh 42க்கு பதிலா put 3.8 crore rupees, which is 380 lakh rupees divided by 157. அப்படி போட்டுரு. Okay, 380 lakh rupees divided by 157 rupees. So that 2 lakh 42,000 வரும். Okay, 2 lakh 42,000 வரும். Into what is P1. P1 is equal to how much? P1 is equal to 157. Why I'm asking you to put is that in direct 157, 157 cancel. I'm asking you to write like this. So minus I. What is your I? Your I is 6 crore rupees. So it is nothing but 600 lakh rupees. What is E? E is equal to how much? E is equal to 2 crore rupees. 3 crore rupees is the E. Okay, well, start. It is start. Hmm. 3 is equal to 300 lakh rupees. Okay. So E is equal to 300 lakh rupees divided by 1.1. Okay, 1.1. சரி இப்போ அப்படி ஃபைண்ட் அவுட் பண்ணும்போது என்ன வருது? இது 150 அப்படின்னு உள்ள போட்டா ஓகேவா? ஸோ இட் இஸ் 157 இன்டூ 10 லேக்ஸ் பண்ணா 1570 லேக்ஸ் வரும். ஸோ 1570 லேக்ஸ் பிளஸ் 380 lakhs எனக்கு 1950 lakhs minus 600 lakhs plus 300 lakhs 1650 lakhs divided by 1.1 panna I'm going to get as 1500 lakhs. Okay, 1500 lakhs, which is nothing but 15 crore rupees. Okay, which is nothing but 15 crore rupees is the value of the firm that I'm getting. Okay, value of the firm when dividend is declared. Just 1 minute. Is there any mistakes that we did? Just 1 minute. If dividend are declared, P1 is equal to 157. That is correct. We also have one check here. Okay, well, you can also check it by NP0. It is getting stuck. Just 300 lakh. Oh, 80 lakh dividend. Instead of 0.8, 80 lakh. 380 lakhs. Correct. 380 divided by 157. Other 380 divided by 157, which is nothing but 2.42 lakhs. Okay. This is okay. Market value per share. Existing shares is 10 lakhs. New shares is 2.42 lakhs. Adan பண்ண 10 lakhs. இது பண்ணாலே 2.42 வந்துடும் கரெக்டாக 380 divided by 157. Yeah, 2.42 lakhs into 157. Yes. One nine five zero. What is P0? P0 is 150. Actually, this is the value of the firm. This is correct only value of the firm. அவங்க value of the firm கேட்கல. Let me see the requirement. Calculate the market value of the shares at the end of the accounting year. Okay, they are asking market value of the shares at the end of the accounting year. P1. Proof. Something is wrong. Answer is 1500. That I'm very sure it is correct. 1500 is the answer. They are finding market value of the share at the end of the year. What I am finding is market value of the share at the beginning. I mean, இது அதான் நான் present value பண்ணிருக்கேன். Okay, what they are calculated, they only calculated this much. They only calculated this much. Let me see. So 10 lakhs into 157 is equal to 1570 plus 380 lakhs. That's 1950. So this is nothing but 1950. அவங்க 1950 அப்படியே ஸ்டாப் பண்ணிட்டேன். நான் என்ன பண்ணிருக்கேன்னா 1950க்கு present value போட்டு I am finding the NP0. This is nothing but the value of the firm today. I'm finding the value of the firm today and then I'm proving. What they are doing is that our value of the firm after 1 year பண்ணிட்டு they are trying to prove it. Okay, so that is what is the things that they are doing. Okay, fine. Both are correct. Okay, according to me, both are correct. If you do the same thing for dividend not declared, you are going to get 1500 lakhs. Okay, you're going to get 1500 lakhs. Please, how now I'm proving it? Okay, how now I'm proving it? First, your P1. Okay, your P1 is 165. Once you found your P1, you're going to get number of shares to be issued. So number of shares to be issued is how much? 300 divided by 165. Okay, now 300 divided by 165. Apply value of the firm find out. N plus delta N. N is 10 lakh. Delta N is how much? 300 by 165. Okay, well, 300 divided by 165. Into P1. What is P1? P1 is equal to 165. P1 is equal to 165 minus, okay, minus your earnings. What is your earnings? Minus earnings, correct? Sorry, minus investment. Minus investment plus earnings. So minus investment is 600 lakh rupees is your investment. Okay, 600 lakh rupees is your investment. Plus your earnings is how much? 300 lakh rupees is your earnings. Yes, 300 lakh rupees is your earnings. Divided by 1 plus K. Adhe 1000. You know? So 10 plus 300 will 10. Means 600 plus 300. This 165 will multiply inside right? 165 to 10, 1650. 1650 plus 165, 165 cancel plus 300 lakhs minus 600 lakhs plus 300 lakhs divided by 1.1. I'm going to get 1500. This ends good. Okay. So here also the value is 1950. Here also the value is 1950. Okay. Here also the value is 1950. This is also 1950. This is also 1950. அவங்க இந்த 1950 1950 வச்சு ப்ரூவ் பண்ணிருக்காங்க. நான் அதுல minus I plus E போட்டு divide by 1 plus K0 போட்டு ப்ரூவ் பண்ணிருக்கேன். That is what I did. Okay. So both are correct answer, but this is what is given in the study material. This is what is given in the study material. So let's solve it like this value of the firm. Now in the MM matto, one problem you do. Okay, one problem you do. Why I'm asking you to do is that clarity. Just definitely you have to do this problem. Unless you're having the practice of doing the problem, you won't, be able to get that confidence. Dividend. So dividend decisions. Open with draw box. Yeah, one more thing. You also do a check. Okay, in the 1000 correct or wrong episode check பண்றது. Directly do n into p0. அது கொஸ்டின்லயே கொடுத்துருவாங்க. கொஸ்டின் அவங்களே கொடுத்துருக்காங்க 10 lakh shares இருக்காங்க கரெக்டா, அண்ட் p0 is 150 rupees அவங்களே கொடுத்துருக்காங்க. ஸோ ஆக்சுவலி 150 into 10 lakh பண்ணா உங்களுக்கு அப்படியே என்ன சொல்றது, 150 into 10 lakh பண்ணா you are going to get 1500 lakhs. So before even starting the problem you know the answer, but this is just a way to prove the answer. Okay, this is just a check. Then a fourth step. And the fourth step is a check. How to know, sir, that I didn't do any mistake. This is a foolproof problem. In my problem, before solving itself, you know the correct answer. So you know the correct answer is 1500. Then you solve it and then you get 1500 rupees. Okay, 1500 lakh rupees. And then you check that, okay, which means you're confirmed that you're going to get 6 months. Dividend decisions I want you to do one problem. I'm giving you 5 minutes time. Very easy problem. அதே 3 step follow பண்ணு. Okay, fourth step is just a check. Just do one. Okay, illustration number 1. When dividend are paid. Okay, when dividend are paid, so 3 steps you have to do. First you have to find P1, then you have to do delta n, and then you have to give me value of the firm. Okay, மூணுமே எனக்கு find out பண்ணிட்டு சொல்லு. Actually they are asking you to find out the value of the firm. ஆனா the value of the firm find out பண்ணதுக்கு 3 step எனக்கு வேணும். So find out for dividend are paid, what is P1, what is delta n, and what is value of the firm. I'm giving you 5 minutes time. Very easy problem. Do this problem. Okay, do this problem and give me the answer. Okay. So I got the answer. Price is equal to 105. Number of shares 1429. Value of the firm is 10 lakh. Value of the firm you can directly check. 10,000 shares into 100 is 10 lakh. So answer is obviously correct. Okay, so this is how you can actually be very confirmed whether the answer is correct or not. So now you have clarity over approach also. Okay. So now in dividend decisions, okay, just to give you a revision, in dividend decisions, we are learning only three things. 89% questions are coming from these three only. Okay, Walter, model, and So Walter, Gordon, and MM. So these are the three things that you learn. under Walter's model, it is giving you a price formula, which is P plus E minus V into R by K, the whole divided by K. P is giving you a price formula, E1 into 1 minus V divided by K minus B into R. And this is giving you the value of the firm formula that is calculated in 3 steps. So the first step is you have to find out the P1. So P0 is equal to D1 plus P1 divided by 1 plus K. 1 plus K. Here you will find P1. Second step, you have to find delta N. Delta N is nothing but you have to find out what is your earnings. Okay, what is your earnings? And the earnings lender, what is the dividend that you're paying? Okay, and this I minus E minus T, correct? I minus E minus T. This is nothing but the either one you do for P1, we are going to get delta N. And the last one is finding the value of the firm. It is nothing but the value of the firm is N into P0. Okay, so value of the firm is equal to N into P0 is equal to n plus delta n into P1 minus I plus E divided by 1 plus K. This is what is the value of the firm formula. And this value of the firm, you can have a check when dividend are paid, when dividend are not paid. So these two will give you optimum dividend payout ratio. Okay, but if R is more than K, then the optimum dividend payout ratio is 0. If R is less than K, optimum dividend payout ratio is 100. If R is equal to K, then any dividend payout ratio. Here we don't have any optimum dividend payout ratio because whatever be the dividend, your value of the firm always remains same. This is what is the approach is trying to tell. So that is the reason I tell that approach is irrelevant and Walter and Gordon are relevant theories. So with this, we completed dividend decisions. So we have spent a good amount of time in dividend decisions. Why? Because 100% a question will come from dividend decisions. It is very easy to calculate, and you have also got practice of how to solve the problems. Now, the next one, what we are going to see is working capital management. Okay, working capital management. Okay, so we started at 2, right now it is 2:47. So let us take a 10 minutes break. Let us take a 10 minutes break. So refresh yourself on the 10 minutes left, and this will be our last chapter that we are going to discuss, and we are going to discuss this also in a good manner. Okay, we are going to discuss this in a good manner. So I'm taking a 10 minutes break for you. So 10 minutes break now. It is 3:50. We are going to meet at 4 p.m. We are going to meet at 4 p.m. So we are going to target working capital management in the next 1 hour, and we are going to see working capital management, the standard questions that are asked in working capital management. Okay, so we'll meet in 4 p.m. and then we'll continue with working capital management. Or 10 minutes break. I want you to refresh and come because working capital management, many students feel it difficult, but now because of our revision, you'll be able to handle maximum amount of questions. Okay, and this is my guarantee. So now take a 10 minutes break. We are going to see after 10 minutes at 4 p.m. Okay, so we are starting with working capital management. So starting with working capital. Fine. Mm, mm. So in working capital management, what we are going to cover is that mostly questions are either asked. So 50% weightage is either given for a problem which is called as estimation of working capital, or problems are asked from management of receivables. So mostly these two are the important areas from where problems are usually picked and usually asked. Mostly problems are asked from these two questions only, from these two areas. Estimation of working capital and management of receivables. Now in these both cases, okay, in these both cases, in these both cases, we have some standard set of questions that are being asked. So in management of working capital, we have questions related to operating cycle, And then we also have questions related to the estimation of working capital, like estimation and calculation of different elements of working capital. Okay, different elements of working capital. So we have these, standards of problems. Now, when I'm discussing about working capital management, first of all, you know that working capital is equal to current asset minus current liability. Working capital is the amount which is required for day-to-day operations of the business. Or to day-to-day operations of business. Okay. Now, if I were to tell you, okay, now this is the last time I'm making a balance sheet, okay, final time I'm making a balance sheet now, you would have tired now. But any chapter I'm just making a balance sheet and I'm explaining, this is just a logical and a conceptual way of understanding everything through P&L and balance sheets. So balance sheet liabilities and asset liability side is called as the sources of capital, asset side is called as the application of funds. So here you will be having, okay, here you will be financing money, which is called as financing decisions. This money you will be investing here, and this is what is called as investment decisions. From here you will get the profits, and what we have to do with that profit is what is called as the dividend decisions. Suppose you took 100 crore rupees as finance and 100 crore rupees worth you have invested, okay, 100 crore rupees worth you have invested in all the assets. Now just see, you financed 100 crore rupees. Now you have invested that 100 crore rupees in different types of assets. Now just by seeing that 100, just by seeing that assets, suppose the assets are land, building, machinery, okay, all these are the different types of assets that you, purchased. Now, you purchase land, you purchase building, you purchased machinery. Okay, what are all the things that is required? You purchased. Now, just by seeing those land, just by seeing those building, and just by seeing those machineries, will you be able to just 1 minute? No, ना पापा नहीं आ गया ना आ भी लेकिन नीचे आ भी तो फिर आ बेटा जे हाँ करा तो ना समझे 32 सेकंड खाली पॉज करेगी ना Apologies. There was some disturbance. Someone came into the office. Okay. So we were discussing about working capital management. So under working capital management, what I said is that you will invest in buildings or invest in land. Now, just by seeing the land and building, will you get profits? No, you won't get profits. So you will get profit only when you make that capital work. So to make that capital work, you want some amount to be invested as working capital. That is what is working capital. So 10 crore rupees you will invest. Okay, you will purchase some raw material. You will purchase some WIP. Okay, something you will purchase. So all this current asset and current liabilities, this investment in current asset and current liabilities, what is called as working capital management. So this working capital management is what you are going to study. Okay. So the first type of questions that are usually asked in the examination is estimation of working capital. Okay. So what you have to do is that you have to estimate the amount of raw material required, estimate the amount of WIP required, estimate the amount of finished goods required, estimate the amounts of debtors, estimate the amounts of creditors, and then plus some safety margin you have to add, and this okay, and estimate the amount of payables that you have to minus, and this is something called as working capital requirement. This is the working capital that you have to finance it to make your capital work. So how to estimate that working capital is what you're going to see. So first you have to estimate the raw material, estimate WIP, estimate finished goods, estimate debtors, creditors, and then you have to start. Okay. Now to give you an idea, okay, now to give you an idea, how do we estimate? Okay, how do we estimate? We have two approaches. Okay, we have two approaches. One is called as total approach. One is called as cash cost approach. Okay, total approach like you will be doing, you will be having total cost, cash cost like you will be having only cash cost. So here cash cost is nothing but total cost minus depreciation. Okay, for example, in the raw material investment line, the WIP investment line, the finished good investment line, sir depreciation amount இருக்கும் அதை அப்படியே remove பண்ண cash cost approach நீ value பண்ணு. Okay, let me give you an example. Okay, let me give you an example. Okay, just question one. Calculation of raw material stock. Okay, I'm just giving you some two, three small examples. I'm gonna we'll move ahead. Okay, it is stuck. Just 1 minute. Let me take a new section so that it won't get stuck. Just a moment. It just got stuck. So now a new section is open. Let me just close this application and start once again. Okay, I think it's working now. Okay, so now I'll give you an example for calculation of raw material stock. Suppose you have a question, okay, you are budgeting a production of 60,000 units, okay, and your raw material consumption per unit is equal to 2 kg, and your raw material cost is equal to say rupees 4 per kg, okay, and your raw material holding period, okay, raw material holding period is equal to 2 months. Now, what you have to do is that you have to estimate what is the amount of investment that is required in raw material. Now, for this, first, what you have to do, you just have to see what is your raw material consumption. Okay, you just have to see what is your raw material consumption. Okay, so raw material consumption. So first in kgs. Okay, your budgeted production is how much? 60,000 units. So for the 60,000 units, you need 2 kg raw material. So you need 1,20,000 kgs of raw material first. Now, what is the raw material amount that will be required? Now, this is 1,20,000. This you have to this you want for the entire year because this is budgeted production per annum. Correct? Budgeted production per annum. So now what you need is that out of this 1,20,000 kgs, how much should I keep in stock? So how much you have to keep in stock? Because 2 months is a raw material holding period, which means you hold raw material for 2 months. So this 1,20,000 is for the entire year consumption. So on this entire year consumption, what is the 2 months holding period? So this is the raw material stock. So it is stock in kgs. Okay. So now what is the raw material you required in stock? Your raw material which is required in stock is equal to 1,20,000 divided by 12 into 2, which is nothing but the raw material holding period. So now you need 20,000 kgs in stock. So this 20,000 kgs in stock, what is the value? Okay, raw material stock, what is the value? The value is equal to 20,000 kgs into 4 rupees per kg, okay, into 4 rupees per kg, which means your raw material investment that you need is 80,000 rupees, okay, 80,000 rupees. So which means you know that the formula for raw material stock is equal to annual raw material consumption into raw material holding period, correct, into raw material holding period divided by, okay, divided by 12 months or 360 days. Okay, this is what you are doing. This is what you did. Exactly, this is what you did. Raw material holding period, what was it, or what was your annual raw material consumption? Your annual raw material consumption was 1,20,000 kgs. Okay, 1,20,000 kgs. 1,20,000 kgs into 5 rupees, I mean into 4 rupees, sorry, into 4 rupees, into your raw material holding period is 2 divided by 12. Okay, 2 divided by 12. So this is what you did. So 12 panala, this is nothing but 10,000. So 10,000 into 8 is equal to 80,000 rupees. So this is how you have to calculate raw material stock. So I've explained how to calculate raw material stock. Okay, I've explained how to calculate raw material stock. Similarly, okay, well, similarly, everything is calculated. So I'm giving you the formulas now. Okay, these are not formulas. I've explained you, correct? So raw material stock is equal to average annual raw material consumption divided by 12. This is the monthly consumption into raw material holding period. Okay. அதே மாதிரி WIP stock. So WIP stockல இங்க வெறும் raw material cost தான் போட்டுருக்கோம், கரெக்டா? So WIP ல raw material costம் இருக்கும், labor costம் இருக்கும், other expenses costம் இருக்கும். So raw material is always 100%. Okay, ba? Suppose if nothing is given in the question, raw material is always 100% cost you have to put, and other expenses, correct, and the labor and other expenses on the 50% cost of put. That is what is the cost of production. Okay, so here what you have to do, average cost of production, average cost of production divided by 12 into WIP holding period. Okay, average cost of production divided by 12 into WIP holding period. This is what is WIP stock. அதே மாதிரி finished goods stock எப்படி சார் கண்டுபிடிக்கணும்? Finished goods stock is equal to average cost of goods. So it's correct here. All the other expenses, cost of goods, so selling expenses will also come. So average cost of goods sold divided by 12 into finished goods holding period. Next என்ன சார் debtors. Your debtors எப்படி சார் வேல்யூ பண்றது? Average credit sales divided by 12 into debtors collection period. Okay, into debtors collection period. ஆனா இந்த debtors வந்து நீ காஸ்ட்ல வேல்யூ பண்ணுவோம். ஸோ இங்க கிரெடிட் சேல் இல்லாம நீ காஸ்ட் ஆஃப் கிரெடிட் சேல் பண்ணுவோம், விச் மீன்ஸ் இங்க இருந்து நீ ப்ராஃபிட் ரிமூவ் பண்ணணும். ஓகேவா, இங்க இருந்து ப்ராஃபிட் ரிமூவ் பண்ணா, so this is what is called as total sales approach. So total sales approach ஒன்னு, total cost approach ஒன்னு, cash cost approach ஒன்னு. ஓகேவா, so debtors நீ மூணு வகையா மூணு வகையா நீ calculate பண்ணலாம். First is this sales approach. அதான் நம்ம calculate பண்ணோம், credit sales போடணும். Second is cost approach. இங்க credit sales போடாம cost போடணும். ஓகேவா, the cost of goods sold போடணும் நீ. Or third is the cash cost approach. இங்க இருந்து depreciation remove பண்ணும். That is what is the cash cost approach. Next one is the creditors. So here average credit purchases divided by 12 into creditors. Okay, the credit period. The credit period. You are going to get the creditors. So this is how you have to calculate so management of working capital on the period. Okay, sir. So இங்க மெயினா நீ என்ன தெரியுமா பார்க்கணும்? ரா மெட்டீரியல் கால்குலேட் பண்ணும்போது நீ ரா மெட்டீரியல் கன்சம்ஷன் எடுப்ப. WIP கால்குலேட் பண்ணும்போது நீ காஸ்ட் ஆஃப் ப்ரொடக்ஷன் எடுக்கிற. ஓகேவா, ஃபினிஷ் குட் கால்குலேட் பண்ணும்போது நீ காஸ்ட் ஆஃப் கூட்ஸ் சொல்ல வேல்யூ பண்ற. டெட்டாஸ் பண்ணும்போது சேல்ஸ்னா சேல்ஸ்ல வேல்யூ பண்ணுவேன், காஸ்ட்னா காஸ்ட்ல வேல்யூ பண்ணுவேன். கிரெடிட்டாஸ் பண்ணும்போது கிரெடிட் பர்ச்சேசஸ் எடுக்கிறேன். ஓகேவா, ஆல் தீஸ் ஆர் தி டிஃப்ரெண்ட் ஐட்டம்ஸ் தட் வி சா. ஓகே சார். ஸோ ஒரு ப்ராப்ளம் எப்படி சார் நான் ப்ரெசென்ட் பண்ணுவேன் சார்? நெக்ஸ்ட் ப்ராப்ளம். ஸோ எஸ்டிமேஷன் ஆஃப் ஒர்க்கிங் கேபிட்டல். Estimation of working capital requirement. This is what is the statement that you have to do. First, you have to put current assets. Okay, current assets. Current assets என்ன சார் வரும்? ஃபர்ஸ்ட் இன்வென்ட்ரி போடும். ஓகேவா, இன்வென்ட்ரியும் உங்க கையில ரா மெட்டீரியல் இருக்கும், WIP இருக்கும், ஃபினிஷ் குட்ஸ் இருக்கும். ஓகேவா, தென் என்ன போடு? ரிசீவபிள்ஸ் போடு. ரிசீவபிள்ஸ் என்னதான் சார் இருக்கலாம்? டெட்டாஸ் இருக்கலாம், பில்ஸ் ரிசீவபிள் இருக்கலாம். ஓகேவா, தென் கேஷ் பேலன்ஸ். ஓகே, தென் கேஷ் பேலன்ஸ். Usually cash balance will be given in the question. இது எல்லாம் பண்ணா you are going to get gross working capital. So gross working capital in current liabilities minus பண்ணு. ஓகேவா, current liabilities. So current liabilities என்ன சார் வரும்? அதான் trade payables, bills payable, wages payable, overheads payable இதெல்லாம். ஓகேவா, so trade payables, bills payables, wages payables. Okay, overheads payables, அதான் what is called as outstanding expenses. இது எல்லாம் பண்ணா you're going to get இப்போ current asset minus current liabilities. Okay, இதெல்லாம் நீ மைனஸ் பண்ணணும். இதெல்லாம் நீ மைனஸ் பண்ணா you're going to get excess of current asset over current liabilities. So which means how much excess current asset you're having over current liabilities. இங்க நீ என்ன பண்ணும்? சேஃப்டி மார்ஜின் ஆட் பண்ணும். என்ன சார், ஏன் சார் சேஃப்டி மார்ஜின் ஆட் பண்ணும்? நீ எக்ஸாக்டா அந்த பின் பாயிண்ட் அமௌண்ட் வைக்க முடியாது. கரெக்டா, கொஞ்சம் சேஃப்டி மார்ஜின் வைக்கணும். ஸோ தட் பிசினஸ்ல நாளைக்கு ஏதாவது ஒரு ஸ்டாக் வேல்யூ மேலே கீழே போனா உங்க கையில சில மார்ஜினும் இருக்கும். ஸோ சேஃப்டி மார்ஜின் will be usually some percentage of that excess. அது பண்ணா this will be a working capital requirement. Okay, this will be a working capital requirement, also called as net working capital. ஓகேவா, your net working capital requirement. அப்படிதான் சார் நீங்க ஸ்டேட்மெண்ட் ப்ரெசென்ட் பண்ணணுமா? அப்படிதான் ஸ்டேட்மெண்ட் ப்ரெசென்ட் பண்ணணும். நான் என்ன பண்றேன்னா ஒரு ப்ராப்ளம் மட்டும் ஒன்று சால்வ் பண்ணி காட்டுறேன். ஸோ தட் உனக்கு ஒரு கிளாரிட்டி வந்து. ஓகே சார், சொன்ன ஒரு ப்ராப்ளம் சால்வ் பண்ணி காட்டுறேன். Hmm. Okay. So see, this is the problem. Financing of working capital. இந்த பாரு. Financing of working capital. Raw material, WIP, finished good, creditors எல்லாம் கொடுத்திருக்காங்க. Annual purchases of raw material, annual cost of production, annual cost of goods sold, annual operating cost, annual sales எல்லாமே கொடுத்திருக்காங்க. ஓகேவா? They are asking you to find out the net operating cycle period. இப்போ சார் நீங்க எஸ்டிமேஷன் ஆஃப் ஒர்க்கிங் கேபிட்டல் தான் சொல்லி கொடுத்துருக்கீங்க சார். இந்த நெட் ஆப்ரேட்டிங் சைக்கிள் என்னது சார்? நெட் ஆப்ரேட்டிங் சைக்கிள் இஸ் நத்திங் பட் net operating cycle is nothing but raw material holding period plus WIP holding period plus finished good holding period plus debtors collection period minus creditor period. Creditor period is equal to operating cycle. Okay, so operating cycle is equal to raw material holding period plus WIP holding period, okay, plus finished goods holding period plus debtors collection period minus creditors payment period is equal to operating cycle. இது எப்படி சார் நான் கால்குலேட் பண்றது? Raw material holding period is equal to average raw material stock divided by average annual consumption into 12. Are you all with me? இங்க பாரு. So raw material holding period எப்படி கால்குலேட் பண்றது? அதான் இது மட்டும் இங்க கொண்டு வந்துரும். ஓகேவா? So average raw material stocks, okay, average raw material stock divided by average raw material consumption into 12 or 360 days. சரியா? Into 12 months na 12 months இல்லனா 360 days போடுவோம். சரியா? This is how you have to calculate. அப்படின்னா சார் இந்த கொஸ்டின்ல அவங்க டேஸ் தான் கொடுத்துருக்காங்க. அப்படின்னா 365 டேஸ் வேணும். சரியா? ஏன்னா அவங்களே 365 டேஸ் கொடுத்துருக்காங்க. ஸோ இன்டூ 365 டேஸ். சார் அப்படின்னா நீங்க என்ன சார் சொல்றீங்க? ரா மெட்டீரியல் ஹோல்டிங் பீரியட் இஸ் ஈக்குவல் டு average raw material stock divided by average raw material consumption into 365 போட்டா வந்துரும். ஆமா, into 365 போட்டா வந்துரும். So average raw material stock என்னது சார்? அதான் opening plus closing divided by 2. ஓகேவா? This is opening, this is closing. சார் அப்படின்னா 45,000 plus 65,356 divided by what is my average raw material consumption? ஸோ பர்ச்சேஸ் ஆஃப் ரா மெட்டீரியல் கொடுத்துருக்காங்க. ஆனால் எனக்கு கன்சம்ஷன் வேணும். ஓகேவா? ஸோ கன்சம்ஷன் ஓப்பனிங் ஸ்டாக் ஆஃப் ரா மெட்டீரியல் பிளஸ் பர்ச்சேசஸ் மைனஸ் க்ளோசிங் ஸ்டாக் ஆஃப் ரா மெட்டீரியல் பண்ணால் எனக்கு கன்சம்ஷன் வந்துடும். ஓகேவா? ஸோ நான் ஓப்பனிங் ஸ்டாக் ஆஃப் ரா மெட்டீரியல் எவ்வளோ? ஓப்பனிங் ஸ்டாக் ஆஃப் ரா மெட்டீரியல் இஸ் 45,000. கரெக்டா? ஸோ 45,000 பிளஸ் 4 lakh rupees minus closing stock எவ்வளோ? 65,356 into 365 பண்ணா எனக்கு ரா மெட்டீரியல் ஹோல்டிங் பீரியட் வந்துடும். எனக்கு ரா மெட்டீரியல் ஹோல்டிங் பீரியட் வந்துடும். ஓகேவா? நான் கால்குலேட் பண்ணிக்கலாம். ஓகே சார், அப்படின்னா 45,000 பிளஸ் 4 lakh மைனஸ் 65,356 எனக்கு 379,635 வருது சார். ஓகேவா? 379,635 வருது. ஸோ 379,635. ஸோ 45,000 பிளஸ் 65,356 பண்ணா எனக்கு 1,10,356 வருது. இன்டூ 365 டேஸ் போட்டால் எவ்வளோ சார் எனக்கு ஆன்சர் வருது? divided by 379,635 into 365 போட்டா எனக்கு 106 days. 106 days. So this is how you have to calculate the raw material holding period. Is there any mistake? Okay, average opening plus closing divided by 2. Okay, average opening plus closing divided by 2. Silly mistakes I did. Okay, so opening plus closing divided by 2 panna. This is 110,356 divided by 2. Okay, So 110,356. 110,356 divided by 2 divided by 379,635 into 365 days பண்ணா 53 days வரும். Okay, 53 days வரும். அதான் 106 divided by 2 போகும். So 53 days is the answer for raw material holding period. 53 days is the answer. Same thing you have to do for WIP. Okay, but WIP ல average annual cost of production அப்படியே கொடுத்துருவாங்க. So அதே எடுத்து you do for WIP. Same thing do for finished goods stock. அதே cost of goods கொடுத்துருவாங்க. 26 days average stock போட்டு. Same thing do for debtors collection period. Okay, average debtors போட்டு 41 days. Same thing do for creditors payment period 55 days. Now operating cycle is equal to raw material holding period plus WIP holding period plus finished goods holding period plus debtors collection period minus creditors holding period. Creditors collection period போட்டா உனக்கு 86 days வரும். Okay. So this is the first problem, which is operating cycle. Second என்ன சார், 86 days is my one operating cycle. அப்படின்னா ஒவ்வொரு இயர்ல எனக்கு எவ்வளவு சார் ஆப்ரேட்டிங் சைக்கிள் வரும்? ஸோ இட் இஸ் நத்திங் பட் 365 டிவைடட் பை 86. எனக்கு 4.24 ஆப்ரேட்டிங் சைக்கிள் எவ்ரி இயர் வரும் சார். தட் இஸ் தி ஃபர்ஸ்ட் திங். ஓகேவா? 4.244 ஆப்ரேட்டிங் சைக்கிள் வரும். ஓகே சார், 4.244. Have it in mind, 4.244. ஓகே சார். ஸோ 4.244 எனக்கு வரும். இப்போ என்ன சொல்றாங்க, என்னோட ஆனுவல் ஆப்ரேட்டிங் காஸ்ட் இஸ் 9,50,000 சார். ஸோ 9,50,000 rupees இஸ் ஃபார் 1 இயர். ஓகேவா? ஆனா எனக்கு எவ்ரி இயர் 4.244 எனக்கு ஆப்ரேட்டிங் சைக்கிள் வருதுன்னா எனக்கு எவ்வளோ ஒர்க்கிங் கேபிட்டல் ரெக்வயர்மெண்ட்? இட் இஸ் நத்திங் பட் 9,50,000 divided by 4.244 பண்ணா I am going to get the answer 2,23,845. This is what is my working capital requirement. Okay, this is what is my working capital requirement. 223,845. 223,845. 223,845 is my working capital requirement. Okay. This is one problem which is actually possible in the examination. இனி என்ன பண்ண தெரியுமா, ஸ்டடி மெட்டீரியல்ல லாஸ்ட் யூனிட்ல பிராக்டிஸ் ப்ராப்ளம் கொடுத்துருவாங்க. அதுல கொஸ்டின் நம்பர் 1, கொஸ்டின் நம்பர் 2, கொஸ்டின் நம்பர் 3 அண்ட் கொஸ்டின் நம்பர் 4 பிராக்டிஸ் பண்றப்போ ஈஸியா எல்லா ப்ராப்ளம்ஸுமே நீ ஹேண்டில் பண்ணலாம். இந்த 4 ப்ராப்ளம் மட்டும் பண்ணலாம். லைக் இஃப் யூ நாட் ஸ்டடிட் ஒர்க்கிங் கேபிட்டல் மேனேஜ்மெண்ட், இந்த 4 ப்ராப்ளம் மட்டும் பார்த்துட்டு போ, எவ்ரி ப்ராப்ளம் யூ பி ஏபிள் டு ஹேண்டில். ஓகே, 1 2 3 4 இந்த 4 ப்ராப்ளம் மட்டும் பண்ணிட்டு. ஓகே, now this is over. Okay, estimation of working capital ல 2 types of problems are there. So நான் உங்களுக்கு ரெண்டுமே சொல்லியிருக்கேன். The first type of problem is estimation of working capital. அப்படி போகணும். ஓகேவா? நீ எல்லாமே நீ கால்குலேட் பண்ணணும். ரா மெட்டீரியல், WIP, ஃபினிஷ் குட், இது வேல்யூ. தட் வாஸ் ஹோல்டிங் பட் திஸ் இஸ் வேல்யூ. டெட்டாஸ் எல்லாமே கால்குலேட் பண்ணிட்டு லாஸ்ட்டாக சேஃப்டி மார்ஜின் ஆட் பண்ணிட்டு you have to find a working capital requirement. This is problem number 1. So these are problem number 2. Operating cycle கண்டுபிடிச்சிட்டு number of operating cycles கண்டுபிடிச்சிட்டு அதுக்கு பேசிஸா நீ working capital requirement calculate பண்ற. So that is problem number 2. So now இந்த ரெண்டுமே நீ ஹேண்டில் பண்ணிருக்க. Operating cycle also you will be able to handle, an estimation and calculation of different elements of working capital basis la working capital requirement also you will be able to handle. Third one is management of receivables. Interesting. Okay, many people leave this topic and idu mattum nama simple nama pannalam. Okay, simple nama pannalam. Management of working, okay, management of receivables. Okay, management of receivables. Management of receivables, super interesting topic. Management of receivables என்னது சார்? See, ஒவ்வொரு கம்பெனி டெட்டாஸ்ல சில இன்வெஸ்ட்மெண்ட் பண்ணி வச்சிருக்காரு. புரியுதா? For example, when I'm talking about debtors, how do we calculate debtors? It is nothing but credit sales into debtors collection period divided by 360 days or 12 months. அப்படிதான் debtors calculate. For example, you are having an annual sales. of 3,60,000 rupees. And your debtors collection period is 3 days. Okay, so which means in 3 days you receive your amount. Okay, in 3 days you receive your amount. So how will you calculate debtors? Debtors is nothing but 3,60,000 into your debtors collection period is 3 days divided by 360 days. So what is the debtors? Your debtors amount is 3,000 rupees. Your debtors amount is 3,000 rupees. Correct? Now, what does this 3,000 rupees means? 3,000 rupees means that this is nothing but your 3 days worth of sales. Okay, but 3 days worth of sales. So, which means, what does it mean? That means in any given point in time, 3 days worth of sale is always with debtors. Okay, always with debtors, which means 3,000 rupees is actually invested in debtors. That is what I'm trying to tell. Okay, 3,000 rupees. So in the 3,000 rupees, I manage pannu, correct? So, this is a decision. See, credit period policy is one decision. Credit period policy, which means should I keep my debtors holding period as 30 days or 60 days? And the credit period I 30 days, 60 days, 90 days. That is one credit period policy. Second, another sir, collection policy. Collection policy, sir, should I collect my debtors on my own, or should I factor it? Should I factor it and take it in amount now and let them collect? So this decision is what is called as collection policy. Second one is discount policy. Sir, should I give this discount? Either you give your money in 30 days, or I will give you 2% discount. And this decision is called as discount policy decision. Next, another credit appraisal. Na konja lenient vekanuma, na konja strict vekanuma. So all these are the decisions that you're going to take in this chapter. Okay, management of receivables. But while solving problem, all these problems will be solved in a very similar fashion. Or in a very similar fashion. I will directly jump into the problem. Through problem, I will explain the concepts. Okay, this alone through problem, I'm going to explain the concept. Question mattu paru super. Okay, this question 360-degree question. All the aspects are covered in this questions. Suppose you are having current sales of 150 lakh rupees. Okay, you are having a current sale of 150 lakh rupees. Adala your cost of sales. Okay, cost of sales is 75% of sales. So which means in the sales cost is 75%. Either 25% is the gross profit. Okay, 25% is the gross profit. Okay. Now in this cost of sales, 80% is variable cost and 20% is fixed cost. Okay. Now, what are my bad debts? My bad debts is equal to 1% of sales. 1% of sales is my bad debts. What is my required rate of return? My required rate of return is 12%. What is my current policy? Okay, my current policy is 30 days. Okay, this is what is the question. What is required is they are proposing. Okay, they're proposed policy of 60 days. So what they are telling, sir, right now we are giving a credit period of 30 days. What I want is I want to increase my 30 days to 60 days, sir. Sir, increase panna enna sir ago? First credit period increase panna nariya per ipo vaangita vaanguvom, correct? Because the credit period is high. Your credit period is higher. So adanala your sales will be increasing. Appadina sir, na 60 days panna what will be my increase in sales? Okay, my proposed increase in sales is 15%. Your sales 15% increase ayidu, sir. Ana nee adhigama credit period kodutha lot of bad people will also come, but your bad debts will also increase. So what will be your bad debts now? Your bad debts is now 4% of sales. Sir, Appina, when you are having a 30 days of credit period, you are having 1% bad debts. But now when you are having 60 days of credit period, you are having 4% of bad debts. Okay, this is what is the question. This is what is the question. All these problems are solved basis cost benefit analysis. Okay, cost benefit analysis. See, this is a very lengthy chapter, but I'm trying my best to give you the best out of this short period of time to get the maximum marks out of the limited period. So what you have to do is that you have to do something called as cost benefit analysis. Sir, அப்படின்னா நான் என்னோட கிரெடிட் பீரியட் 30 டேஸ்ல இருந்து 60 டேஸ் இன்க்ரீஸ் பண்ணா what is the benefit that I'm going to get and what is the cost that I'm going to incur? Next discussion that we are going to do. So now in this, what is the thing? First 30 days was my credit period. If I'm giving sales now, after 30 days, I'm going to receive my money. Second, in the 30 days, increase பண்ணிட்டு நான் 60 days increase பண்றேன். So நான் 60 days increase பண்ணா என்னோட sales 15% increase ஆயிடும். என்னோட sales 15% increase ஆனா அது எனக்கு benefit கிடைக்கும். So which means previously I was making 150 lakh rupees of sales, but now I'm going to make not 150, I'm going to make 150 plus 15%, 172.5. அதுதான் என்னோட இன்க்ரீஸ் இன் சேல்ஸ். சார் இன்க்ரீஸ் இன் சேல்ஸ்க்கு எனக்கு என்ன சார் பெனிஃபிட்? இன்க்ரீஸ் இன் சேல்ஸ் அதுக்கு வேரியபிள் காஸ்ட்டும் இன்க்ரீஸ் ஆயிடும், ஆனால் ஃபிக்ஸட் காஸ்ட் சேமா தான் இருக்கும். அப்படின்னா இன்க்ரீஸ் இன் கான்ட்ரிபியூஷன் இஸ் மை பெனிஃபிட். கரெக்டா? ஸோ த பெனிஃபிட் தட் ஐம் கோயிங் டு ரிசீவ் இஸ் இன்க்ரீஸ் இன் கான்ட்ரிபியூஷன். Increase in contribution is my benefit. Cost என்னது? ஒரு increase in bad debt is your cost. Increase in bad debt is your cost. Second என்ன சார் காஸ்ட்? See 30 days பீரியட் இருக்கும்போது உன்னோட டெட்டாஸ் கொஞ்சம் கம்மியா இருந்திருக்கும். இப்ப 60 days கிரெடிட் பீரியட் வைக்கும்போது உன்னோட டெட்டாஸ் அதிகமாயிடும். டெட்டாஸ் அதிகமா ஆகும்போது your investment in debtors is more. ஆனா இந்த அமௌண்ட் டெட்டாஸ்ல இன்வெஸ்ட் பண்ணாம வேற எங்கேயோ இன்வெஸ்ட் பண்ணிருப்பேன்னா உனக்கு 12% ரிட்டர்ன் கிடைச்சிருக்கும். கரெக்டா? So you're losing those 12% interest because of increase in debtors. So this is also your opportunity cost. Correcta? That is your interest cost. Correcta? Increase in interest cost. I mean increase in interest lost. Increase in interest lost. Okay, this is what is your second cost. Okay, so what is your benefit and what is your cost? Then you calculate one of them. So now sir, நான் உனக்கு ஸ்டெப் சொல்றேன் சார், எப்படி பண்ணணும் எக்ஸ்பிளைன் பண்ணிட்டு நான் உனக்கு ஸ்டெப் சொல்றேன். அண்ட் நீ இதே மாதிரி எக்ஸாம்ல ப்ராப்ளம் சால்வ் பண்ணணும். ஓகேவா? நான் வாட் இஸ் மை எக்ஸிஸ்டிங் சேல்ஸ்? மை எக்ஸிஸ்டிங் சேல்ஸ் இஸ் 150 lakhs. ஓகேவா? இந்த 150 lakhsல வாட் இஸ் மை காஸ்ட் ஆஃப் சேல்ஸ் அண்ட் வாட் இஸ் மை ப்ராஃபிட்? ஓகேவா? மை காஸ்ட் ஆஃப் சேல்ஸ் இஸ் ஆக்சுவலி எவ்வளோ அவனே சொல்லியிருப்பான். மை காஸ்ட் ஆஃப் சேல்ஸ் இஸ் 75% of sales. Correct? So 150 into 75% is my cost of sales. 112.50 lakh is my cost of sales. So balancing 37.50 lakhs is my profit. Okay, in the cost of sales, 80% is variable cost and 20% is fixed cost. In the cost, 112.50 lakhs 80%, okay, into 80% is variable cost. 90 lakh is variable cost. Okay, 112.5 into 80%, 90 lakh is variable cost, and then 20% is fixed cost. 112.50 lakh into 20% is equal to 22.50 lakh is the fixed cost. Okay, it's the fixed cost. Now you can find out the contribution. Contribution is equal to sales minus variable cost. So what is your sales? Your sales is 150 lakh. What is your variable cost? It is 90. So contribution is equal to 60 lakh rupees. Okay, contribution is equal to 60 lakh rupees. Now this is your old contribution. Now what is a new contribution? In the increase in contribution, now you benefit. Correct? So update new calculate. Okay, proposed we have to calculate. What is a proposed sales? A proposed sales is 150 into 115%. That will be 172.50 lakhs. And the 172.50 lakhs, what is the cost of sales and what is the profit? What is the cost of sales? What is the profit? Now you don't do a mistake of calculate cost of sales into 75%. It will be a mistake. Fixed cost will always be fixed. So cost of sales, variable cost or fixed cost. Okay, now if sales is increasing by 15%, your variable cost will also increase by 15%. Are you all with me? Your variable cost will also increase by 15%. Aprina 90 into 115%, 103.50 is my variable cost now. Okay, and fixed cost will remain fixed, so 22.50 lakhs. So now this fixed cost is fixed, variable cost is 103.5. இது ரெண்டுமே add பண்ணா I'm going to get my cost of sales as 126 lakhs. Okay, so 126 lakh is my cost of sales. So 126 lakh is my cost of sales. My sales is 172.5 lakhs. So what is my profit? It is 46.50 lakhs. Okay, அப்படின்னா இங்க contribution என்னது my contribution is 172.50 lakhs minus my variable cost is 103.50 lakhs. So my contribution is 69 lakhs. So what is my increase in contribution? 69 minus 60. My increase in contribution is 9 lakh rupees. So this is the benefit that I'm getting because of increase in my credit period. Okay, so my increase in contribution is 9 lakh rupees. Are you all with me? Okay, this is the benefit. Next, what is my cost? Okay, next, what is my cost? Increase in bad debts. Okay, my increase in bad debts. இதை நான் எப்படி சார் கால்குலேட் பண்றது? Existing, what is your existing bad debts? Existing bad debt and existing sales into percentage. So existing 150 lakh into 1% is your bad debts. So up to the 1.5 lakh rupees is the bad debt in existing. Okay, existing bad debts. அப்படின்னா after your proposed sales, what will be your bad debts? Okay, so this will be 172.52 lakhs, correct? The proposed sales is 172.50 lakhs into 4% is your bad debts. Okay, correct. So 172.5 into 4% is 6.9 lakh rupees. So now your bad debt is 6.59 lakh rupees. Previously it is 1.5 lakh rupees. Now it is 6.59 lakh rupees. So this is your cost, correct? Additional bad debts. So what is your increase in bad debts? Your increase in bad debts is equal to 6.9 minus 1.5 is equal to 5.4 lakh rupees. 5.4 lakh rupees. So this is your increase in bad debt, 5.4 lakh rupees. Okay, sir. நெக்ஸ்ட் வந்து ரொம்ப இம்பார்ட்டன்ட். இங்க தான் நிறைய பீப்புள் மிஸ்டேக் பண்ணுவாங்க. இங்க தான் உனக்கு அண்டர்ஸ்டாண்டிங்கே தேவைப்படுது. ஓகேவா? இன்க்ரீஸ் இன் இன்ட்ரெஸ்ட் லாஸ்ட் அப்படின்னா என்னது சார்? இன்க்ரீஸ் இன் இன்ட்ரெஸ்ட் காஸ்ட். Okay, sir. Now, increase in interest cost. First of all, what is the existing interest cost? Existing, what is my interest cost? Which is nothing but debtors into the required rate of return. Okay, debtors எப்படி calculate பண்ணுவேன்? அதான் நான் ஆல்ரெடி சொல்லி கொடுத்துருக்கேன்ல. அந்த sales into அந்த debtors collection period divided by number of days போட்டா. So what is your sales? 150 lakhs. What is your debtors collection period? 30 days. Total how many days? 360 days. This is what is your debtors amount, correct? 150 into 30 divided by 360 பண்ணா debtors வந்துரும். Are you all with me? Okay. இது நான் மல்டிப்ளை பண்ண 12% எனக்கு இன்ட்ரெஸ்ட் காஸ்ட் வந்துடும். ஸோ மல்டிப்ளை பண்ண எவ்வளோ வருது? 150 into 30 divided by 360 to 12% பண்ணால் உங்களுக்கு 1.5 lakh rupees வந்துடும். ஓகே, 1.5 lakh rupees வந்துடும். திஸ் இஸ் your existing interest cost. So what is my proposed interest cost? ஸோ எக்ஸிஸ்டிங்காக நான் அவ்வளோ இன்ட்ரெஸ்ட் அவ்வளோ இன்வெஸ்ட்மெண்ட் பண்ணிருக்கேன், அதில் நான் அவ்வளோ ஏர்ன் பண்ணியிருப்பேன். ஆனால் இங்கே எவ்வளோ? Now it is 172.5. இது 172.52 தானே? இல்லை 50 வந்துச்சு. 172.50. Okay, 172.50. It is not 52, it is 50 lakhs. Into now 30 ல இருந்து 60 மாறுது. ஓகேவா? டிவைடட் பை 360 days into 12%. இது பண்ணா உங்களுக்கு எவ்வளவு வருது? into 60 divided by 360 into 12% பண்ணா உங்களுக்கு 3.45 lakh வருது. ஓகேவா? 3.45 lakh வருது. So what is your increase in interest cost? Your increase in interest cost is equal to 3.45 minus 1.5 is equal to 1.95 lakh fees. Okay, sir. So this is my increase in interest cost. ஆனா நான் சொல்லுது this is not correct. This is not correct. ஏன் சார் அப்படி சொல்றீங்க? This is not correct. ஏன்னா நீ எவ்வளவு இன்வெஸ்ட் பண்ணிருக்க, ஓகேவா? அதுல தானே உனக்கு இன்ட்ரெஸ்ட் கால்குலேட் பண்ணும். Have you invested 150 lakh? இல்ல. நீ 150 lakh இன்வெஸ்ட் பண்ணல, கரெக்டா? 150 lakh இஸ் த சேல்ஸ் அமௌண்ட். நீ காஸ்ட் தானே இன்வெஸ்ட் பண்ணிருக்க, கரெக்டா? டெப்டாஸ்ல நீ காஸ்ட் தானே இன்வெஸ்ட் பண்ணிருக்க. இதுல ப்ராஃபிட் இஸ் ஆல்சோ இன்க்ளூடட். அப்படின்னா நீ காஸ்ட் ஆஃப் சேல்ஸ். ஆக்சுவலி திஸ் அப்ரோச், திஸ் இஸ் ஆல்சோ கரெக்ட், பட் திஸ் இஸ் கால்ட் அ சேல்ஸ் அப்ரோச். நீ எக்ஸாம்ல காஸ்ட் அப்ரோச் எடுத்து சால்வ் பண்ணும். அன்லஸ் இட் இஸ் டைரக்ட்லி given, you have to use it சேல்ஸ் அப்ரோச். நீ எக்ஸாம்ல காஸ்ட் அப்ரோச் யூஸ் பண்ணணும். சார் அப்படிதான் நான் என்ன சார் பண்ணணும்? சேல்ஸ் எடுக்காம காஸ்ட் ஆஃப் சேல்ஸ் எடுக்கணும். ஓகேவா? சேல்ஸ் எடுக்காம காஸ்ட் ஆஃப் சேல்ஸ் எடுக்கணும். சார் அப்படின்னா என்ன சார்? எக்ஸிஸ்டிங் எவ்வளோ? Existing cost of sales is equal to 112.50 lakh. into 30 divided by 360 into 12%. எவ்வளோ வரும் 1.125 வரும். நியூ எவ்வளோ சார்? நியூல உனக்கு 126 lakh rupees is the cost of sales. பாரு 126 lakh rupees is your cost of sales. 126 lakh rupees is your cost of sales. In the cost of sales, then you value debtors. Your debtors is valued at cost into 60 divided by 360 into 12%. 2.52 lakh. Now, what is the increase in interest cost? Increase in interest cost is equal to 1.395 rupees. Okay, 1.395 lakh rupees is your increase in interest cost. Okay, this is what is the cost approach that you have to follow in the examination. But we have one more approach which is called as variable cost. அவன் என்ன சொல்றானா, இந்த 112 lakh is the cost of sales. ஆனா இதுல fixed cost நீ போட்டிருக்க. Fixed cost is not an investment, correct? It is fixed. அது நீ எவ்வளோ இன்க்ரீஸ் பண்ணாலும் fixed cost is fixed. So actual investment is actually variable cost தான். அவன் என்ன சொல்ல வரானா, variable cost approach என்ன சொல்ல வரானா, your interest, whatever you are investing is only variable cost. Because fixed cost is fixed, it is irrelevant, correct? So அவன் என்ன சொல்றானா, variable cost approach. What he is telling is value your debtors at variable cost. Up in the existing is 90 lakh rupees was a variable cost. Into 30 days divided by 360 days into 12%. 0.90 lakhs. Next 103.50 lakh rupees. That is what is a variable cost into 60 days. Okay, into 60 days divided by 360 days into 12%. 103.5 into 60 divided by 360 into 12% பண்ணா 2.07 lakhs வருது. 2.07 lakhs. Now what is the increase in interest cost? Increase in interest cost equal to 2.07 minus 0.9 is equal to 1.17 lakh rupees. Okay sir, ஆனா மூணு அப்ரோச் சொல்லி கொடுத்துருக்கீங்க சார். சேல்ஸ் அப்ரோச், காஸ்ட் அப்ரோச், வேரியபிள் காஸ்ட் அப்ரோச். எக்ஸாம்ல என்ன சார் அப்ரோச் ஃபாலோ பண்ணும்? எக்ஸாம்ல நீ காஸ்ட் அப்ரோச் ஃபாலோ பண்ணு. ஓகேவா? எக்ஸாம்ல நீ காஸ்ட் அப்ரோச் ஃபாலோ பண்ணு. சார் எக்ஸாம்ல காஸ்ட் டீடைல் கொடுக்கல சார். காஸ்ட் டீடைல் கொடுக்கலன்னா சேல்ஸ் அப்ரோச் ஃபாலோ பண்ணு. ஓகேவா? காஸ்ட் ஆஃப் சேல் டீடைல் கொடுக்கலன்னா சேல்ஸ் அப்ரோச் ஃபாலோ பண்ணு. காஸ்ட் டீடைல் கொடுத்துருக்காங்கன்னா cost approach follow. If cost details are given, then use cost approach. If variable cost, fixed cost details are given, unless the question is asking you to calculate a variable cost approach, don't calculate in variable cost approach, calculate in cost approach. So the answer is 1.395. But I've given you all the approaches in exam. Suppose if it is asked different approach, you should not be confused. Now, what is the increase in interest lost? It is 1.395. Okay, it is 1.395. 1.395 cost approach. Okay, wow. Sales approach is not the right approach. Unless cost data is given, okay, wow, you have to use cost approach only. If cost data is not given, then sales approach use. So now this is the benefit, this is the cost. Okay, this is the benefit, this is the cost. So what is the net benefit or cost? So now you see here you are having net benefit. So which means 9 lakh is the benefit that you're getting because of increase in credit period. 5.4 lakh rupees is the cost because of increase in credit period. Minus 1.395. So actually the answer is 2.205 is the net benefit that you're getting. Therefore, you can go ahead and increase your credit period to 30 days to 60 days. This is what is the question. Now, any question from management of receivables vanda நீ இதே ஃபார்மேட்ல சால்வ் பண்ணு. ஓகேவா? பெனிஃபிட் அண்ட் காஸ்ட். பெனிஃபிட்ல ஒரு பெனிஃபிட் which is increase in contribution. காஸ்ட்ல we are having two types of cost, increase in bad debt and increase in interest lost. இந்த ஃபார்மேட்ல பண்ணா any problem you will be able to solve. Okay, நீ எக்ஸாம்ல நீ ஸ்டடி மெட்டீரியல் பார்க்கும்போது different types of approaches will be given. Total approach, incremental approach. Okay, actually we are doing total approach now. Okay, because you're finding total and then you're finding total approach is the best conceptual way of understanding the problem. Are you all with me? So this is how we have to solve the management of receivables problem. Okay. With this, we are closing the chapter management of working capital. Let me show you one problem alone. Okay, so that you get some idea. See here, now here you see in the problem we solve management of receivables தான். ஆனா இங்க credit period வரகாம அவங்க மூணு different types of PV sell பண்றாங்க. அது குவான்டிட்டியில இன்னொரு எக்ஸ்ட்ரா அடிஷன் மட்டும் யூஸ் பண்ணிட்டு செல்லிங் பிரைஸ் 9000 போட்டுருக்காங்க. ஸோ இங்கே நீ டோட்டல் டெட்டாஸ் நீ கால்குலேட் பண்ணுவேன். கான்ட்ரிபியூஷன் 20% டைரக்டா கான்ட்ரிபியூஷன் கொடுத்துருக்காங்க. அண்ட் கேரிங் ரிசீவபிள்ஸ் இஸ் 20% per annum. ஸோ இதை நீ அப்படியே கால்குலேட் பண்ணலாம். ஓகேவா? Increase in contribution and bad debts is not given. So what is the increase in contribution and what is the interest rate? Okay, lost interest lost. After calculate pandu, you are going to get this answer. One is contribution increase. Second one is the cost of the carrying debtors, which means 20% is the required rate of return. இது நீ பண்ணா excess of contribution over carrying the cost. Okay, ஏன்னா இங்க benefit is contribution, cost is the cost of carrying the debtors, that is 20%. அது மட்டும் calculate பண்ணா அந்த benefit cost analysis போட்டு பண்ணா you're going to get the answer. Don't see this format, you see the format that is I've given. And the format to solve பண்ணா any problem will be able to solve it. Yeah, I'm just seeing some general problem. Management and receivables question sure. Both are management of working capital. Yeah. Same TV set problem. Okay, so the TV set problem ticket. So you practice this. Okay. See this. Company wants to follow a more prudent policy to increase its sales. So right now it is existing sales is 9 lakh. An average period is 45 days. Now what they want to do, they want to increase from 45 day to 60, or 45 plus 50, or they want to increase to 95, or they want 45 plus 75, or they want to increase to 90, or they want to increase to 45 plus 70 na 115 days. Okay, but this is the increase. Apply panna, what will be your increase in sales? That is what is given. Increase in sales. Okay. Selling price is 3. Average cost per unit is 2.25 and variable cost per unit is 2. So அதில் அவங்க என்ன சொல்லியிருக்காங்கன்னா 2.25 is the average cost and a variable cost is 2. Okay, variable cost is 2. Current bad debt is 1%. Your required rate of return on additional investment is 20%. Assume through 60 days, we apply solve problem. Okay, now in the sixth problem, total approach. Okay, this is a similar problem that we have solved. See, first, total sales quota. Okay, what would be your sales in 45 days, 60 days, 75 days, 90 days, and 105 days? What would be your sales? Okay, then cost sir. First is variable cost. That's the variable cost will be increasing. ஏன்னா ஃபர்ஸ்ட் கேஸ்ல மட்டும் வேரியபிள் காஸ்ட். ஸோ வேரியபிள் காஸ்ட் அவங்க என்ன கொடுத்துருக்காங்க, அது இன்க்ரீஸ் ஆகும். ஆனால் ஃபிக்ஸட் காஸ்ட் சேம் ஆயிருக்கும். அது போட்டால் வாட் இஸ் யர் டோட்டல் காஸ்ட்? ஓகே, வாட் இஸ் யர் டோட்டல் காஸ்ட்? அது நீ கண்டுபிடிச்சிட்டேன். ஓகே, திஸ் இஸ் யர் டோட்டல் காஸ்ட். Next, see the bad debts. Okay, next see the bad debts. What is your bad debts? Okay, what is your bad debts? அதுல இருந்து நீ பார்க்கலாம். ஓகேவா, எக்ஸிஸ்டிங் பேட் டெட் எவ்வளோ, இன்க்ரீஸிங் பேட் டெட் எவ்வளோ நீ பார்க்கலாம். ஓகேவா, நோ அப்படியே அவங்க எக்ஸ்பெக்டட் ப்ராஃபிட் அச்சீவ் பண்ணிருக்காங்க. திஸ் இஸ் நாட் ரிக்வயர்ட் எனக்காக. இன்ட்ரெஸ்ட் லாஸ்ட் எங்கப்பா? இன்ட்ரெஸ்ட் லாஸ்ட், யா ஓகே, ஆப்பர்ச்சுனிட்டி காஸ்ட் ஆஃப் இன்ட்ரெஸ்ட் அதான் இங்க பாரு 7,15,000 அந்த காஸ்ட் மட்டும் எடுத்துருக்காங்க. ஓகேவா, 7,15,000 காஸ்ட் எடுத்திருக்காங்க. அதுல அவங்க கால்குலேட் பண்ணிருக்காங்க. கரெக்டா, அதான் காஸ்ட் அப்ரோச் அவங்க ஃபாலோ பண்ணிருக்காங்க. Okay, are you all with me? So cost approach follow பண்ணிட்டு they are finding the interest. So this is the present interest, this is the increase in interest. So see wherever the increase in interest is there. Okay, so நீ என்ன பண்ண, increase in interest போட்டுக்கோ, increase in contribution போட்டுக்கோ. So what is the present contribution? Present contribution is this much. அதுல how much is the increase in contribution? அதுல வந்து you have to find out. Okay, then you are going to get which approach is a better approach. That is what is a total approach. Total approach. இந்த ஃபார்மேட் பார்க்காத, நான் சொல்ல ஃபார்மேட்ல போட்டா ஈஸியா நீ ஹேண்டில். இன்க்ரீஸ் இன் கான்ட்ரிபியூஷன் which is nothing but existing contribution and new contribution, then what is the increase in contribution? Cost of the existing bad debt is 99,000. So increase in bad debt is this much, okay, but this much is the increase in bad debts. And the calculate. Then increase in opportunity cost, okay, increase in opportunity cost. I mean increase in interest lost. Increase in interest lost. Last and net benefit and net cost. That is how we have to calculate. Answer correct. Okay, so here you see the net benefit is more. The proposed policy should be this 60 days. 60 days should be the proposed policy. That is what is the answer. Incremental approach solve பண்ணி காட்டிருக்காங்க. And then and the third method, expected rate of return for solve பண்ணி காட்டிருக்காங்க. Any one method can solve பண்ண, it is okay. And it is always better to use a total approach because that is conceptually more sound. Are you all with me? Okay, but in the problem மட்டும் நீ ஓனா ஹேண்டில் பண்ணா உங்களுக்கு ஈஸியா வந்து. Okay. So with this we are closing management of working capital. See, I know, okay, I know that in the last, okay, in the last starting like this, now you know speed will increase. I know. Now, if you have already revised, this would be comfortable for you. Sir, now already revised பண்ணல sir. இல்லனா long back I have revised. அப்படினா you would not be comfortable with the speed. Sir, அப்படினா நான் என்ன சார் பண்ணணும்? அப்படினா ஒரு வாட்டி புக்ல அந்த கான்செப்ட் பார்த்துக்கோ, ரெண்டு மூணு ப்ராப்ளம் பார்த்துக்கோ, அப்புறமா இந்த வீடியோ பார்த்தா உங்களுக்கு புரிஞ்சிடும். ஓகேவா? தட் இஸ் த ஃபர்ஸ்ட் திங். செகண்ட் இஸ் தட் நம்ம 12 hours ரிவிஷன் பண்ணுவோம். ஓகேவா? ஃபர்ஸ்ட் டே 6 hours and then 3 plus 3. ஓகேவா? 6 plus 3 plus 3. 12 hours revisionல I have covered almost all the topics. Okay, now coverage 80%. I can tell that comfortably and 80% நான் cover பண்ணிட்டேன் அப்படின்னு சொல்லுவேன். ஓகேவா? Comfortably 80% of the portion நான் cover பண்ணிட்டேன். See, any other faculty பாரு, or you know, அந்த 12 hoursல 80% ஃபுல்லா cover பண்றது, it is actually very difficult. ஓகேவா? அந்த 12 hoursல complete 80% proper conceptual உனக்கு clarity வரணும்னா, it is actually very difficult. I've tried my best efforts to give you the the best output possible in the 12 hours. Now, sir, this is my side. Okay, my side I've completed whatever is the effort that I'm making. Now, sir, what is your side effort? Your side effort is that you have to practice first the number of problems. Standard problem first are solved, then special problems solved. Okay, first give importance to the standard problems that are repeatedly asked in the examination. Second, you give for the special adjustment and special points. For example, the modified internal rate of return, arbitrage process, அதெல்லாம் என்ன சொல்றது, special problems second preference கொடு, standard problems நீ first preference கொடு, because 80% chance standard problems are கேட்கறாங்க. So this is the second. Third, நீ என்ன பண்ண தெரியுமா? Solving the problem is one thing, ஆனா presentation நிறைய பேர் losing marks. So நீ என்ன பண்ண தெரியுமா? All India rankers ஓட பேப்பர்ஸ் டவுன்லோட் பண்ணு. ஓகேவா? சர்டிஃபைட் காப்பீஸ் டெலிகிராம்ல டவுன்லோட் பண்ணு, இல்லைன்னா ஆன்லைன் கூகுள்ல போய் டவுன்லோட் பண்ணு. ஒரு 4-5 பேப்பர் டவுன்லோட் பண்ணிட்டு அவங்க எப்படி ஆன்சர் பிரசென்ட் பண்றாங்கன்னு பாரு. ஓகேவா? ஹவு தேர் பிரசென்டிங் தி ஆன்சர்ஸ். ஒன்ஸ் யூ கெட் டு நோ ஹவு தேர் பிரசென்டிங் தி ஆன்சர்ஸ், யூ வில் பி கெட்டிங் அ கான்ஃபிடன்ஸ் ஹவு யூ ஹேவ் டு பிரசென்ட் யுவர் ஆன்சர்ஸ். பிகாஸ் மெனி அ டைம், ஓகேவா, மெனி அ டைம் you are losing marks of the presentation side. Presentation side நீ improve பண்ணிட்டேன்னா 5 to 6 marks increase ஆகலாம். Okay, 5 to 6 marks increase ஆகலாம். அதெல்லாம் because of silly mistakes or because of wrong presentation we are losing marks. So why we want to lose marks when you know everything? You know everything but still you are losing 5 to 6 marks. Now it is not a very good thing. So you have to improve this part also. So it will hardly take over 2 to 3 hours by just seeing different types of certified papers where people have scored more than 70-80 marks. Okay, you see those papers, you will get clarity. Okay, so I've said you two things. One, I said you to do a lot of problems. Second, okay, and because of time constraint, give more preference to standard problems and special problems. The second preference. Second one, the all India rank paper certified copies. So people are scoring highest marks on the paper download பண்ணிட்டு see how they are presenting the paper and improve your presentation also. Third, don't leave any chapter, don't leave any topic. Okay, that is my big advice that I want to give you. Don't leave any chapter. So in the chapter விட்டுட்டு போயிடு. No, don't leave working capital also. Okay, working capital also see the standard problems, so that even if you don't have any other option, இதுல இருந்து at least ஒரு 6 marks and the 4 marks actually score பண்ணலாமே. கரெக்டா? Even not 100%, or 50, 60, 70% score பண்ணலாம். But if you're leaving it completely, then you don't have any confidence. So at least see something, skim through the chapters. Even if you're not ready, skim through the chapters. That is, one more thing that I want to give. third one, okay, third one is the, I mean, the fourth and the last one that I want to give you is that this is the time where you want to invest more time, because as and when the exam times gets closer and closer, that time become more costly and costly. So exam one day முன்னாடி இருக்கிற time is more expensive. அதுக்கு 2 day இருக்கிற முன்னாடி less expensive. Correct? So as and when you're going closer to the examination, your time or the value is becoming more and more important. So this is your important time that you have to realize, and then you have to invest your time here. So in this time, stay away from distractions, stay away from what are the things that you have in your mind. Right now, since you have only around ஒரு 20 days இருக்கும், ஓகேவா? So அந்த 20 days நல்லா focus பண்ணிட்டு, you have to focus on all the subjects and all the chapters in a very judicial manner. You have to allocate your time. Write mock test, okay? Test எழுதிட்டு have the practice, increase your speed, and focus on the presentation area also. So with this, I hope, I wish, and you pray that you get all the success in the examination. Okay. So I'm signing off for now. If you have any doubts, you can ask in the comment section, or you can be with that. And if you have learned something, okay, always try that first you appreciate yourself that yes, I have learned something, and also appreciate in the comment section, or also appreciate the faculty also, so that I will also get that satisfaction that yes, I'm doing something that is reaching the students in a right manner, and also the students get the motivation that yes, we are learning something from this faculty. Okay. So with this, thank you very much. Okay, thank you very much. So see you all in the other side. Okay, so thank you very much. So I'm closing this, and all the very, very best for the examinations. Thank you. So in the comment, you let me know, okay, how you liked the classes, because that is also very important for me to know that whether are we going in the right spirits or right approach. And if you need any other help or guidance, do ask me. I will be more than happy to help you to the best possible manner. Okay, so thank you very much.